We got retail sales this morning. Next up is industrial production. And for that, I think we're going to head to Rick Santelli. Hey, Rick.
Baby.
Hi, Carl. Indeed, another surprise of strength. Industrial production expected up 0.2. Multiply that by 4, up 0.8%. We've gone from last month being the second weakest number of the year, revised to -0.9, so down almost 1%, to the second best number of the year. Capacity utilization also better than expected at 78%, sequentially higher than the 77.4 in the rearview mirror, and at 77.4 was a downward revision, just like industrial production. So last month, a bit weaker. This month, significantly stronger, especially on IP. And that's an August number. We did see retail sales also better than expected. And Empire, we saw yesterday, was as well a strong number. And that's September. So there definitely seems to be a better pulse on some of the manufacturing areas of the economy. And if we look at interest rates, everything on the yield curve, other than the 30-year bond, now is a higher yield, lower price than yesterday's close. Walk down the street.
Good morning. Well, it looks like Intel can hold the gain. Get some good news, and it just gets knocked right back down. Microsoft is up higher. Its buyback program going to kick in. People like that. Microsoft actually off the screen. Microsoft on the move since that news came out last night. Okay. All right. So top 10. Intel is still the top 10. Hewlett Packard. Let's see. HPE looks good. HPE is up. Okay, with levels overhead. Airbnb got downgraded. That's moving a bit higher. Airbnb. Okay. Hope everyone had a good evening. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is September 17th. We got about 11 minutes to go. 11 minutes to go for the opening bell. Make sure you read the Gamma update. If you don't, we can go through it real quick here. Won't take us but a minute. Okay, futures higher. We all know that. Okay, Gamma will flip to a negative position if we drop below 5,600. So make sure you keep an eye on Gamma. Gamma would be risk off below 5,600. Today is the last day for VIX options. They expire tomorrow. We know that. All right, not much to tell you. Futures are higher. Give us an opportunity to sell some into strength. With the Fed looming tomorrow, many are expecting a 50 basis point cut. I'm hoping for 25 basis points. Elizabeth Warren, Senator of Massachusetts, looking for 75 basis points. What the hell?
Coming up, a West Coast edition of Kramer's Mad Dash as we count down to the opening bell. Futures remain fairly solid here as all-time highs once again in sight. Stay with us.
Okay, so the top 10 stocks, we're just going through those. Hewlett Packard, Intel, even though it's fading a bit. Airbnb, GE Vernova. Okay, that's higher. Let's take a look a little closer at the 60-minute chart. Okay. What else? Carnival Cruise Lines up again today. Carnival. Okay, let's take a look. Different chart. 8 minutes to go. 8 minutes to go. Let's look at Carnival. Norwegian's catching up. Carnival is currently trading up 25 cents. Okay, Carnival. Norwegian Cruise Lines catching up with the other two. All right. And Royal Caribbean, these three certainly look good. Royal Caribbean, what's his name? On Melissa's show last night was talking for Royal Caribbean to come back down a little bit. Guy Adami. Okay, Supermicro is up 1.36%, trading 450, 449.50. Supermicro looking for that to continue. Supermicro. Okay, 470 is the call wall, so we'd like to see that continue. Supermicro. What we got there? The Qs. All right, so Cayman got long the Qs yesterday. You still in it, Cayman? You still in those Qs? I imagine so. Okay, you're looking at ASTS. Okay, ASTS. ASTS.
They could decide to try to lean. I mean, we'll see tomorrow. I guess, yeah, how it plays out. But I think they're in an okay sort of spot, right? I mean, they're
ASTS. ASTS.
This is a much better place for the Fed to be in than a situation where rates are so incredibly low that they might find it real hard to stimulate.
ASTS moving higher.
I think this time they're in an okay place.
And that's one of the differences between us and the rest of the world too. Is it seems that they have a lot more stimulating they need to do, particularly Europe and other places. But that's kind of what it seems like the main question then right now, David, kind of final point to come back to this kind of nature of reflexivity almost in currencies is how do you assess when?
Okay, Intel's starting to turn. Intel turning.
We're applying is going to have that positive force on the economy because when it does, shouldn't dollar firm up? Shouldn't bond bulls get some pushback whenever that kind of inflection point comes?
Intel shorts covering. Intel shorts are covering. Presently looking like it's turning the corner. Intel. Okay, we'll see if this short covering can last. We got some overhead resistance supply. Okay. Futures are higher. SPY Qs higher. All right, the Qs. All right, let's get ready for the opening bell. We got about 4 minutes to go. 4 minutes to go. As you know, the first 15 minutes, 20 minutes of the trading day, I'm usually taking profits off the table where warranted. If I'm up 20% overnight, a lot of times I'll take profits off into strength, see if it can move higher. And once it starts to show dojis or weakening momentum, I'll sell into that early morning strength. Sometimes stocks keep going, but I look for a stock that's up over, or a position that's up over 20% overnight. Usually, to take profits. Options, same thing. If I'm up big, I'll take those off as the implied volatility explodes at the open and then contracts back to normal. I'll capture that implied volatility and that premium, and then I'll turn around and look for a buying opportunity on a dip. I'm looking for stocks with high relative volume, 2 to 3 times or higher than normal, averaged out over the previous 5 trading days. If we have a stock or a candidate that's showing elevated relative volume, especially before the open, 3, 4, 5 times or greater than normal, that tells us that institutions are active, the stock is in play. We look for relative volume and VWAP. If VWAP is up and to the right, you can see VWAP right there on the Qs is up and to the right. That tells us a stock is in play. They're just using this as an example. VWAP up and to the right, high relative volume, and usually a catalyst to go with it, like an upgrade or earnings or a buyback, like with Microsoft. That tells us a stock is in play. Okay, so we look for these little hints to tell us what to do. Okay, we got a little short covering, and Intel dropped right back down to the low of the day. Intel just cannot get out of its own way. That is one pathetic stock. Shorts, whether or not they are building positions, I don't know. Let's take a look at Intel. So Intel on the daily, last night it got up to what, 2250, 2275, something like that. So it was above this level here. We'll open this morning at 2091. Okay, so just about where we were at the close. Need to get above 22, and volume needs to be as elevated as it was yesterday for several days. That would tell us that institutions are falling all over themselves. Otherwise, it just looks like it's going to stay in this base. Microsoft, on the other hand, great news, stock buyback, CapEx spending. Following through this W-shaped pattern we identified last week into this week, breaking above that 426.79 zone. Okay, we're about to open here. That told us that bulls are in charge. We're above the 50-day. I'm going to take some profits off of Microsoft at the open, most likely. See how much these are up. Okay, let's get ready to rumble. Okay. Microsoft waiting for options to open. There, they open now. Okay. Microsoft. Wow, look at that. Look at those shorts. Bastards. Okay, so Microsoft's up there at the highs. Okay, people taking profits at the open. Okay, there goes HPE. HPE on the move. Okay. Monitor. Microsoft. Okay, Microsoft going to sell a little bit into strength. Amazon up big too. Okay, Amazon's up big. I'm going to take profits off on Amazon, practicing what I preach. Amazon, Microsoft.
Russell 2000 up, NASDAQ up. That's crucial. Both together, big tech in good shape. Apple a little bit lower, maybe something.
Okay, there goes Amazon, selling some into strength. Amazon. Okay, that's a nice gap up. What's Google doing? Google. Let's go to the New York FANG Index. Okay, so all of the New York FANG Index components are doing exactly the same thing, except for Apple. Apple's down again this morning on news. Okay, let's look at Amazon, Google. Okay, Tesla's on the move. Tesla.
Low 17. Bitcoin going to make another push to 60. Even Ethereum up 2%. So if you start to see the cryptos, which has been really
Tesla. Huge move in Tesla. Okay, Tesla. Any news on Tesla? What we got here? Tesla. Global renewable energy market expected to reach 2.44 trillion. Okay, we know that already. Okay, Tesla.
They're trying. I mean, at the end of the day, you would think that we would have compression going into that FOMC meeting tomorrow, especially with that retail sales print, which was decent, came in line with that.
EV sales are expected to turn around in the third quarter. 460,000 deliveries, up 6%. Okay, so that's Tesla. Tesla's on the move. Looking good, Tesla. Okay, we got to change a character over there on the right. You see the 60-minute chart. Let's see where our resistance levels are. Checking money magic levels. We want to look at Tesla. Thanks, Money Magic, for your updates as usual. Okay, so Tesla, 230, 240, 230, 240. 240 is the next call wall on Tesla. Okay, nice move on Tesla. Okay, I have some put credit spreads on. I wrote an article last night on the blog. I wrote an article about credit spreads, just a simplified version. It doesn't go on into all the nuances. I was asked to do something like that, the market mechanics of taking and why we would take a credit spread. Okay, Tesla, big move on Tesla.
Yeah, it's amazing how much we have breezed through potential places of resistance. We cruised through 5,500 in a single candle when NVIDIA was ramping up last week. We cruised through the bottom of the range from late August from like 55, 60 up to 5,600. And now we're just taking, basically, we took.
Okay, Tesla looking good.
Not even like a day and a half between the kind of 56, mid 56 range. So the market is just really impressive here. I think.
All right, TSLL shares. I'll take some of those off too. Okay.
Yeah, market breadth is definitely widening out, and that's been the case here for the last month.
ASTS, Super Micro down a little bit today. Microsoft, taking shares off of that. Google. Ooh, let's Google. Tesla looking good. Google.
What we did see yesterday as well as from Friday, consolidation, right? Maybe it's a flag pattern that's taking place. We call it a bull flag. Basically, we're in a bullish trend. We consolidate out, or maybe you even see a little bit of a pullback before pushing higher. That's exactly what we have. So the technical landscape right now actually looks very favorable for a continuation to the upside.
Okay, Google dropping off there, profit taking. Tesla hanging tough. 227. Okay, I'm at maximum profit on Tesla's verticals I mentioned yesterday. I'll take those off. I have the 227.50, 232.50 vertical Tesla. Okay, that was up to maximum. Maximum is your upper strike, the strike that you're long, or excuse me, the strike that you're short is your maximum profit, plus or minus. Okay, Tesla call verticals, taking profits, already did. 227.50, 232.50 at max gain, 232.50. Okay. As the stock goes past your short strike, you're not making any more money. Okay, for the most part, the risk reward profit and loss curve on the options curve flattens out up at your short strike 232.50. That was my upper strike on Tesla. I took that off, watching for Intel to bounce. Intel just cannot get out of its own way. Intel, nope.
So that's kind of where, now to your point, maybe we're a little juiced up, hoping for the 50 instead of 25. Thanks, Casey. Appreciate the look at the level.
Okay, so the New York FANG index stocks, Tesla, consolidate. People taking profits off. It's obvious. Should be obvious to you. They're taking profits off. Let's look at the top stocks on the indices. Remember yesterday we closed at a new high. So that told you had a bullish bias coming into today. Okay, S&P 500, 368 stocks are bullish, 131 are bearish. The rest are unchanged. The NASDAQ 100 survey says 76 to 25, 76 green, 25, 24 now, 24 and 77. 77, 78, more stocks are going green on the NASDAQ 100. Let's look at the top stocks. Airbnb got a downgrade, yet the stock is higher. Go figure. Airbnb. Airbnb caught a downgrade, and what does it do? It rips higher. Okay, so go figure. Airbnb. Okay, looking at Microsoft. You can see how Microsoft is a bit extended right now, so I wouldn't chase it. I took profits off in the strength, looking for this to pull back a little bit. Same thing with Tesla. Gapping up. Okay, modestly. Tesla not moving a lot, but enough to take profits off into strength. Okay, so Airbnb caught a downgrade. Let's see, who was that downgraded again? Okay, that note is gone, so I forget who it was. So Airbnb, this looks like it's turning the corner. Airbnb. Looks like a good setup to me. All right. Okay, Airbnb looks good. Okay, futures chopping around. Let's see, 0 day. 0 day, we've got up volume exceeding 2.6, 3.7, 3.5, 3.9, 3 to 1, 4 to 1 across all the indices from New York Stock Exchange through the IWM. IWM is 4 to 1. Qs are 4 to 1. SPY is 3.5 to 1. Advanced decline line is rising and bullish. TTM is flat at the 0 line, having been over back to 0. All right. So let's see if there's anything else I want to take off into strength.
Another pretty good, kind of tone in it after yesterday, 2.5%. Another decent move there for Intel. I don't want to get too hung up on Intel, but just the idea that there's going to be other stuff maybe works very well to invigorate the bulls, to see other options on the table. Let's talk Qualcomm though for a second, because with some of the Apple nerves, we have seen a few of their suppliers. I don't want to say suffer, but kind of struggle the last few days. What's JP Morgan saying in this price target cut for Qualcomm?
Well, Apple is a factor, but more so Apple insourcing versus any weak demand for Apple. But in terms of Qualcomm, shares are up 1.2% right now. JP Morgan is still bullish on shares.
Airbnb still going. Airbnb looks good. Airbnb, let's see, ATR on Airbnb is 325. It's up 375. So you'd be chasing it, but it looks like an expansion day breakout of this base. Airbnb. Okay, not Tesla. It's Airbnb. Okay, you can see what we're looking at here. You got this base. Price is breaking out. RSI is rising. MACD stochastics rising. Okay, everything is pointing bullish for Airbnb. Okay, 0 day, mostly up volume. Okay, Airbnb. Don't chase it. Look for a BNC pivot. Airbnb.
Pretty big unwind in Qualcomm from the highs. Definitely one I think worth watching. Is looking a little bit soft relative to others. So important to think kind of note when some of these analysts shave down their expectations, especially when so many have been so bullish. It's still bullish, but it does.
Okay, looks good. All right, let's look at some other stocks on the S&P 500. Hewlett Packard's at the top of the list. Hewlett Packard.
Boeing, constantly negative news, constantly new lows. This morning, little change, slightly higher. We'll get a fresh take on how
Hewlett Packard. GE Vernova. What was that? What was that I just saw? Hewlett Packard pulling back. BNC pivots. Maybe early. Steel Dynamics on the move. Let's take a look at Steel Dynamics. STLD. Steel Dynamics. Okay. Still in a downward trend. United Airlines. The airlines have been hot lately. Cruise lines have been hot. United. United Airlines moving higher. Okay, let's see what else. Delta, DAL. Top 10 S&P 500. Include airlines. Cats on the move. Okay. Okay, let's look at Caterpillar. Caterpillar. Somebody mentioned Caterpillar yesterday. Okay, it looks range bound to me. If it gets above the top Bollinger Bands and we see the 921 day start to turn up and to the right, I'd be looking for the first pivot low. In the meantime, it's moving higher. So if you're in it, congrats. Okay. Intel Intel is so pathetic. Can't believe it. Cannot hold a gain, no matter what. Fox A. Fox A is top 10. Fox A. Fox A, late A. Okay. Fox Corporation. Okay. On the move. Trending. Okay. Fox Corporation trending. That's a pretty chart. I mean, very clean looking. Look at that 50-day moving average. Every time it comes back close to the 50-day, what does it do? It continues moving higher.
That is a big question, one that I think
should accept that would be best served accepting a degree of pain for a while, as long as that pain is being directed at rebuilding the company's foundations rather than just sort of putting out grease fires like at every other month.
Yeah, like that's a really good way to put it, right? Fix the process in the back house instead of constantly running around with the fire extinguisher. Fun take. Thanks, John. Appreciate your thoughts. Good corporate philosophy there, John. All right, Tom. Let's trade it here. Obviously, a lot of work to be done with.
You know, down 40% this year, hit 2-year lows. I mean, not a lot going right for this company. So how do you play it using the option market? That's the way I look at it. I always think like, okay, when is there going to be some headline news that's actually positive on Boeing? Because everybody's been waiting. Like never. It's been a falling knife, right? Everybody thinks like, oh, if this is a duopoly, they're going to do well. You know, I'm going to do something bullish in here, use an option. I'm going to buy some calls. Well, that hasn't worked out. So I looked at a different strategy, sell a cash secured put as a way to potentially get into the stock at a lower price or collect some hefty option premium because the IB percentile rank in Boeing right now, even without earnings, not until the 30th of October, it's still about 75%. So in the top 3/4 of implied volatility over the last 52 weeks. Yeah. So option premium is expanded. For sure. It should. So I looked at going out to the October monthly cycle on the 18th, so 31 days to expiration, and just selling an at-the-money put, the 155 strike put, you're going to collect roughly about $6 credit for that put. Now, if the stock is below 155 at expiration, right, look where your break even is, where you get to buy the shares if you hold that short put into expiration. If it goes below 155, you're buying the shares at 149. Mm-hmm. So there's the break even to the downside. That's about 5% below the current share price. And if it stays above 155 into expiration, just get to keep that $600 that you collect for each put you sell.
I knew you were going to be selling puts.
Yep.
Before we did it.
And this is one of those
coming in here and he's selling puts on this thing.
This is one of those strategies where, hey, if this thing expires worthless, I could keep the option premium I collected. Hey, maybe I'll sell another put if I think that the stock's kind of bottoming out here. You got to keep that in mind. You got to be prepared to own the shares if the stock does continue to fall. But you're buying them at a discount. You got to be comfortable owning them.
Right. Okay. Well, there you go. Talk about a nice action Tuesday, selling puts and the worst stock out there. Heck yeah. All right. But while we got to in on one positive note, we got bullish trade in the defense category. So actually, there's plenty of companies that have been doing quite well.
Yeah. LMT's up over 20% so far this year.
Lockheed went crazy on the last earnings.
Right. So
what do you got?
LMT earnings on the 22nd, so I want to avoid that. But maybe the stock rises into that earnings event, right? With the anticipation it's going to be good. So I looked at different strategy. October 18th, same monthly cycle, 31 days to expiration. You'll avoid that earnings event, which is on the 22nd. I'm going to buy an unbalanced or skewed call butterfly to the upside. I'm going to buy the at-the-money 565 strike call one time, sell 2 of the 585 strike call, and then buy 1 of the 590 call. So there's your butterfly, but it's skewed a little bit because you're buying basically a $20 wide bullish call vertical within this strategy, and then selling a $5 wide one. You're paying roughly about a 740 debit on it. That takes you break even to 572.40 over the next month. That's only about 1.5% above the current share price. So you don't need a massive move to the upside, and you're getting a little bit of a pullback here today. So this might be the way to play it if you think this stock's going to grind higher into
Sorry about that.
Where you want it to go towards 585,
Microsoft,
590 because you skewed it. You're gonna have more than a double on your
Amazon holding up, Tesla holding up.
Very straightforward, bullish call butterfly. Classic good bit, you know.
Amazon.
Yeah, it's good stock. It's been rallying. You've got some maneuverability in the trade too. Billions to just rip higher immediately.
Yep, you want it to grind up towards that 5.
Broadcom pulling back.
Which is pretty much what you're doing. All right, thanks, Tom.
Let's watch Tesla for a minute.
Lockheed Martin, which has been rallying, and Boeing, of course, has been doing the opposite. Hour 2 coming up. We're going to trade some staples, heading into a category that has actually been quite solid as the market has been dabbling with new leaders. Staples have been one of them. Even General Mills, many dismissed as being outdated and an artifact. This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week. Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years.
This is potentially a human superpower.
Okay, watching Microsoft and Amazon, both of these for follow through. Intel, yeah. Intel. Okay, maybe the selling that we saw pre-market on Intel will turn into buying. Short-sighted individuals like myself who've been tired of Intel's performance. Perhaps new money will come in. I don't know. We'll see. Amazon looks like it wants to go. Watch Amazon. Okay, looking at Amazon. Okay, so we had an order block at the open. So we're looking for more order blocks to tell us that this will follow through. Let me set up an Amazon trade. Amazon. S&P needs to bounce. The Qs need to bounce. Let's see what the Qs look like. Qs. All right, Qs are bouncing a little bit. Moderna, Amazon, Pinduoduo. Let's see what PD. Okay, let me set up something on Amazon. Looks like it wants to go. Amazon earnings. That's not on the watch list, right? No, just Apple. Amazon. Okay, Amazon. I apologize for the background noise. Flights going right down Carolina Forest Boulevard. Got the windows open because it's so nice out. Office windows are open. Okay, so Amazon looks really good. Okay, so it's got an ATR. Got an ATR of $4.77. It's up 3. Okay, Amazon looks like it wants to go though, but let's see. Earnings. Amazon earnings. Probably October, late October, right? Amazon. Late October. Halloween. Okay, there goes Amazon. So we'll go with the 25th. Actually, we can go with something a little closer if this goes today. A little cheaper entry. Something near the money. Okay, so I'll buy at the money and sell $5 wide. Buy a vertical. Amazon looks like it wants to go. It's after 10 o'clock. Okay, check. Let's see. Let me go 187.50, 192.50. Let's see, Amazon. Okay, Amazon.
yeah. But to your point, I'm looking at the same thing.
187.50. What's Money Magic levels? Amazon. Money Magic levels. Amazon. 187.50, 190. Okay.
364. It looks like in the 10-year. Looking at the
Let me
2-year.
change my order to a limit.
This is a market that's in a bit of a holding pattern, but the reason I say what I say is I feel like if the market had priced it,
Let's
50,
go down
really
to
whether you're talking the Nikkei leaks or whatever you want to kind of use as your forecasting indicator. Some of the
Is that Nick Stevenos? The Nikkei?
okay, put a limit order a little bit lower. Let's see if Amazon just breaks out. Amazon looking at 2 weeks out. If it breaks above this initial level to 180, 187.50, Amazon. 187.50 gets you 190 pretty cool. It looks like it's going to build here. All right, so
that's the indicator right now, 352, again, slightly higher. So, or just a market that's waiting for more information. The Fed's going to provide that tomorrow, that's for sure. But look at stocks. I mean,
Amazon, I'm going to take the September 27th, 1 week out.
Yeah, but still, again, not really.
Sure. I mean, it got plastered.
Yeah, it's still kind of hanging out down slower.
VTLE, never heard of it. VTLE, let's look at earnings first there, Jason. VTLE, Vital Energy. Okay, so this is what it looks like right now. So earnings growth, revenue growth, not really great. Okay, VTLE. Chart turning the corner. It's down at the lows for a reason, Jason. So just keep that. Now, if you want to take a small play on it for a mean reversion, that's fine. Volume coming in. Looks like shorts covering. Okay, you got selling, outright selling from what, 36 down? It lost 36. It was selling for 2 weeks straight. And then you get some bullish volume. Don't be misled. That looks like shorts covering. Yeah, if shorts continue to cover, perhaps RSI looks good. You got stochastics and MACD turning. So this is probably going to work for you. Not my cup of tea, but have at it. Let me know how it turns out. Amazon. I'd go small. Tesla looking good. Tesla looking really good, like it wants to go. Release the hounds. Tesla looking good. It's got an ATR. Tesla. ATR of 10 plus. Okay, so this looks like it wants to go. I want to buy some more TSLL. Let me buy some more TSLL. Chart. Tools. Charts. Active trader. TSLL. TSL looks good.
Former New York Fed president, I think it is, but William Dudley. But yeah, I one could argue, Oliver, that the Fed's behind the curve at this point, and if they only go 25, then they're continuing that. So maybe they kind of push back on some of that.
Tesla.
Behind,
okay, kind of paused here. Tesla.
Either way, I mean, the market, I think,
high of the day. I don't want to buy it at the high of the day. Tesla. Okay, pulling back. All right, so Tesla pulling back would be good for an entry in TSLL. Okay, wait for a dip first. Okay, the FANG stocks are starting to bounce. The S&P is bouncing. The Qs are bouncing. Okay, IWM.
Change some math pretty quickly. For companies that have tons of debt, that have walls coming up, they have to pay, they're going to have to refinance.
Tesla.
Like, that's not really doing much. Now, 25, great. But like the 50 is like, that could make the difference for some small businesses that have really a loan that they're going to have to refinance.
Qs look good. Spiders. Big move on the spiders.
All right.
Indices reversing.
See if maybe we get down to a coin flip for tomorrow, or is the market going to push him at 2/3%, chance basically?
But also don't lose sight of crude oil, don't lose sight of gold, right? Because we had new all-time high in gold yesterday. Crude's recovered.
There we go. Big move there.
Maybe only 25 is necessary.
Up volume still leading. Up volume leading.
Maybe the numbers aren't as bad as we thought. Crude recovering from 65 back to just shy of 71. We're actually at that level right now, 70.98 on the highs as we speak, up 1.25%.
Advanced decline.
Charlie Garner from Decolor Trading earlier this morning, and she kind of walked us off the edge of the abyss and on the peaks of the mountaintops, where she's talking about gold maybe a little bit overdone.
Okay, TSLL looking for the bounce. So there goes Amazon. Amazon's starting to move. Amazon, I like the at the money 187.50s or 188s and go out 5 wide. I'd like to go out 5 wide.
Good look too at gold's fresh strength, pausing a little bit here today, but crude bouncing. Let's go into the staples category. Jeff Pierce has looked at a note this morning, a bullish analyst to call on General Mills. Hit us with the serial bull case, Jeff.
Yeah, first of all, Captain Crunch, Lucky Charms, Honeycombs, those are the best. So I don't know why we didn't mention those in the intro earlier.
These days, they don't know.
We've got earnings coming up tomorrow before the bell. Expectations are expected to go down a little bit year over year.
Okay, the Sun didn't have school Friday in person. They did online Friday and Monday, but he does have school today, so I'll leave at about 10 after 11 as usual and come back around 12 midday. Look for dips around 11 o'clock, BNC pivots between 11 and 2. Okay, let me set my alarm here. Okay. Okay, there goes Google. Google on the move. Google going a bit more. Trying. Google trying. Okay, Tesla looks good. Nano Nuclear is down 7.25%. Nano Nuclear starting to turn the corner. It's a pretty volatile stock if you're holding on to it. Nano Nuclear with a buy signal at the low of the day. Looks like shorts covering. Bitcoin ripping. Bitcoin. Frano, you mentioned Coinbase earlier.
Well, the stock certainly has recovered in a pretty big way. So I would guess the expectations are now increasing as well because you also have had just a lot of money flowing into the sector.
Okay.
Factory ETFs, they're going to have to go and buy General
Okay, shorts are covering a little bit on Broadcom. All right, so we wanted the New York FANG stocks to turn back up. Okay, the S&P's on the move. S&P's on the move.
General Mills is definitely getting some general buying pressure from its category that now it's going to kind of have to live up to.
Yeah, I think so. I mean, we've seen that big rebound since the last report when initially they dropped. Since then, the company has been doing relatively well. I think the execution that we're going to see and them laying out their plan for the rest of 2025 and then the
All right, Tesla, watching Tesla. Amazon looking for that follow through. Nothing yet. Okay, a little profit taking into that strength. I can't help but think that we should be taking profits off into this strength. The Fed tomorrow. I'm doing that. I'm just reducing positions. Okay, the New York FANG looks okay. All right, looking for a follow through. All right, S&P 500. Let me check that again. S&P.
And then if we're seeing any driven growth from some of this ad spending that we've seen them do.
Okay. All right. Thanks.
S&P 500. We've got 363 bullish, 139, 137 bearish, 134 bearish, 132 bearish. We're dropping in the number of bearish positions on the S&P 500. Let's see. The S&P 600 small caps.
See what General Mills likes after the earnings come out tomorrow. This stock certainly, when you look at the chart, almost looks like an AI name over the past couple months here. Certainly getting overextended on a technical basis. And we actually saw the MACD go negative yesterday, issuing a sell signal. So that kind of 75 area looks like pretty, severe.
CMP. All right, CMP.
Over 2 times price to sales now.
Big move on small caps. Compass Minerals.
So what was the kind of hated
Airbnb stay on the top. Airbnb still going. Airbnb.
a good time to buy it when it was most hated. I think kind of a good time to guardedly sell it when it's kind of overloved here. So I'm just going out buying slightly out of the money put calendar, buying the October 72 and a half puts, and selling this week's 72.
Airbnb ripping higher. Airbnb. Airbnb is gone. Look at that.
Very small net debit here. Don't need much of a pullback. Buy through the options, about a 4%
Who is that goose?
earnings-based move here. So really don't need much there.
Okay, looks like we're going to get a follow through.
Price it was just trading at, and the fact that we're buying a
Wow.
25 by
Airbnb not giving you much of a chance. Right around 950, it dipped a little bit and then it took off. All right, let's see. Tesla, jockeying, Amazon trying to push a bit higher. Nano Nuclear, that one's down 7%, 7.6%. Nano Nuclear. What goes up comes back down. Okay, watching Nano Nuclear. Okay, let's look at the top stocks today on the S&P 500. Hewlett Packard, HPE Enterprises, HP Enterprises, Hewlett Packard Enterprises looks good. Above the 200-day, looks like it could keep going. Upper Bollinger Band, Airbnb, big move on Airbnb, breaking out of a base. So what do you see on the base? I see institutions picking up shares. And this is probably going to get back maybe 25, 30 points overhead. Just don't buy the high of the day. You should be fine. Steel Dynamics, descending pattern, but trying to break higher. United Airlines, continuation along with Delta. Enphase looks good. What a bullish bias, trying to get above the 200-day. It's above the 50-day. S&P is still pushing, 0-day. Bitcoin is still going. Let's take a look at Bitcoin. BTC USD. Bitcoin. Okay, looking pretty strong. Bitcoin. What about Coinbase? Coinbase coming off the lows. CONL. Coming off the lows. Okay. Okay. So S&P 500 looking really sharp here. Okay. Steel Dynamics, United Airlines, Pod. What's not overbought? That's the only problem, is that we'd be chasing a lot of things. We'll be chasing a lot. Okay. Amazon, looking for that to follow through. Not yet. Tesla. Nope. Nothing yet. Adobe. Sold Adobe yesterday. It's a good thing I took profits yesterday, or took the position off, I should say. Adobe took that off. Adobe still dropping. Okay, good thing. A lot of times you don't want to take a losing position off. But if it's at support and it doesn't look like it's going to stop, take the loss. Every once in a while you take a loss. So limit the bleeding. Yeah, it could bounce, but that mentality of, oh, I'll just wait for it to bounce. So many people did that with AMD back at, what was it, 150? Back in the bear market, went from 150 down to whatever the hell it was. That just sticks out in my head, AMD. All right. So you look at the weekly time frame on weekly. I remember Money Magic called it over here in 2021. Remember when it was up near 150, 160, Money Magic? And you mentioned that, I think it was this bounce right here, the one that went to 156, 156.73, right in this area. I think you were talking about 155. There was a heavy call wall overhead. You were calling for a retracement. It just kept moving lower. And if you didn't pay attention to the 10 EMA on the weekly time frame, all right, this is AMD. Let me see. If you didn't pay attention and take your lick your wounds, take your loss, this thing went down to $54, 100 points, 100 points. So when the stops are there for a reason, it's not an emotional, oh, maybe I don't feel good today, I'm not going to take the profits. I'm not going to take the loss. That's suicide. You take your loss. If it bounces and starts to show bullish activity, in which case we would be looking for the 10 EMA to turn up on the weekly, then maybe you get back in. But when it drops below the 10 EMA, forget about it. Right now, what's it doing? It's trying to negotiate the 10 EMA. What's NVIDIA look like by comparison? NVIDIA.
The business went public via IPO in May. Shares up about 12%-ish, or no more than that. Sorry. Shares since the debut up about 180%. Welcome to the show, James. Thanks for being here.
Okay, so NVIDIA flat as well. Amazon 10 EMA. It's above the 10 EMA, so I'd be more interested in Amazon at the moment versus NVIDIA. Microsoft back above the 10 EMA. 10 EMA is turning back up. Okay, so back to what's actually working today. So take your stops. Unfortunately, sometimes things don't work. American Airlines, Enphase Energy. That's our solar panels. We have Enphase. Big sideways pattern. So you're at the 50-day, the mean. You're at the mean value area, if you will. So fair value. Premium up here at the highs. Discount down at the lows. So you're right at the equilibrium point or the mean. So if you like these solar stocks, these don't look too bad. Enphase, First Solar, that was trending down, and then we started moving higher after the debate and the Biden-Harris talking First Solar, EVs, etc. Yeah, that looks good. Okay, Newegg is partnering with Dell. Okay, thank you. NEG, NEG. All right, big move on NEG. Penny stock. Okay. Okay, just don't buy the high of the day if you're looking at these penny stocks. Okay. Could keep going.
So a small modular reactor, the idea behind them is that you would mass manufacture a lot of reactor systems. You would so you get economies of scale, and you're looking at a reduced site licensing time, already approved reactors, and then if you reduce that, so it's really industry's sort of solution around some of the challenges that affected the big power plants. And we're looking to try and reduce that time to deployment from the order
Yep.
to.
Yep. You're told not to buy. That's right.
And on the microreactor front, it simplifies it even more. What we want to do is actually take a microreactor and just put it, send it to the location you need it, put it down, plug it in, start outputting power. So if you can do that, then you can really take advantage of economies of scale and produce hundreds of these things, if not thousands, and deploy them all over the world. And then you really drive down those capital and financing costs.
Now, from what I understand, it seems like the international world has been a little bit more receptive. I know that the Middle East has been very much proactive in building some of these reactors.
Okay.
I understand China
Penny stock
too.
and
What about
EGG.
US, so that's kind of the first question: is U.S. versus the rest of the world?
Okay, you're right at supply.
And then number two is, where are your markets?
Okay, looking for the markets to follow through. Bitcoin is just off the screen. Let's take a look at Bitcoin. Bitcoin following through. Big move on Bitcoin. Bitcoin. Okay, 0 day looks like it wants to keep going.
Countries with a lot of island communities, like you take Indonesia, Thailand, Philippines, those kind of areas. You've got hundreds of millions of people living over dozens of islands that all subsist on diesel power, and that's very expensive power too, because you are importing that fuel on a daily basis into these locations. So it's one, very dirty, two, logistically complicated, and three, very expensive. So this is a time where we could ship hundreds of these reactor systems, and still it would only cater to a small component of the international market. And we recently put together an agreement with the Rwandan government because they've got a lot of remote communities too, where if you were to send these reactor systems to these remote areas, you suddenly have an ability to have desalination in those areas. You can have vertical farms. You can have heat for power systems like remote mining, ore concentration. When you're doing stuff like that, then your market is absolutely enormous. And it's, we're not the first country to think of this. Obviously, you mentioned China as an example. I think they have more nuclear power plants being built at the moment than the rest of the world combined. Or it's certainly very close, maybe 45% of them, because they've also come to the conclusion that nuclear is their solution to their long-term energy requirements. And just like the US is now anticipating a huge rise in energy requirements because of tech centers, data centers, AI energy requirements.
Okay. S&P.
And make sure that they're going to build dozens of these small modular
Bitcoin following through.
To make sure there's enough power to power these big tech industries.
That's particularly what I was thinking about here too, is because we've already seen a lot of articles talking about the lack of power in a lot of these areas. In theory, I mean, is there a way to just drop these
Dow Jones,
like right next to these data centers?
Intel, 2179, heading back towards 22. Intel. Let's take a look at Intel. Intel headed back. All right. So originally we saw Intel up, 2279, something like that, 2280 after hours. And they were selling it pre-market. We got down to 2125. I made fun of it. I guess it got insulted, and now it's moving higher. Okay, we're at supply over there on the right. You can see Intel. Okay, so a nice reversal. You can see that first order block right there on the left side of your screen, that first order block. Let's see if we can get some more order blocks as we move higher. All right, S&P looks good.
And the sophistication of its own AI models or data center capacities, and it's going to get stagnant. And obviously, it's a very tech industry is very dynamic. They have a lot of money. It's a lot of that investment has to go into energy because these things don't power themselves.
There's also still sort of a cultural, societal pushback to some extent in some of the nuclear world, even here in Illinois, where we've already got this baseline of nuclear plants. It took a while, up until last year, I think it was.
Yeah, I got 2 cats. I spend $70 a week on at least.
Small scale nuclear development.
Food.
Is there, I'm curious, and I guess speak as frankly as you feel, but is there competition like from, say, like a Constellation?
It's just like when you get, you get a pet, a dog or whatever, or any kind of pet, Papa, please, Papa, Daddy, please, Daddy, 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 Daddy. All right already. I'll buy the damn cat. I'll buy the dog, whatever. And what? 6 months go by, the kids forget about the dog. The dog becomes your favorite. It comes and sits with you. It listens to you when you bullshit about the sports and stuff, yelling at the screen like Bill Burr talks about. It becomes your favorite. Same thing with these cats. They're always in my office hanging out. They know this is the safe space, if you will. Using rabbit ears there. Safe space is in my office. When the yelling goes on downstairs, the wife and the kids, they run up here. So they just stay up here now. When I go downstairs, they know I'm probably going to go feed them. And they run downstairs. I feed them. They purr and they like rubbing against my legs. And then I go back upstairs, and 30 minutes later, they're back upstairs sleeping or looking out the window because I have a 2-story. My office is above the garage. Anyway, just sitting here watching the markets, marking time. I'm not doing anything at the moment. We sold some positions into strength. I like Amazon. I'd like to see if that could follow through. Amazon. Okay, that's just sitting here, gapping up. Looks like they're taking profits off into strength, Amazon.
Traditional plants, you're powering cities, you're powering towns, big things like that.
Okay, Google looking for a follow through in Google. Top stocks on the S&P 500, Hewlett Packard Enterprises, Airbnb, Intel, UAL, DAL, AAL. All the airlines are in the top 5. Or I'd say all. UAL, DAL, AAL. Top 5 S&P 500.
So they're pretty separate markets then, where those facilities will just function on.
It's funny how that works, right?
There's no real like overlap. It's not like, okay, we can take an old dilapidated nuclear facility and it's totally it's a different function.
Yeah, so they're definitely catering for different things.
Yeah.
A small modular reactor, which is obviously larger than a microreactor. Some of those that they're looking at, though, they're still 300, 400 megawatt systems. They're still fairly large power output. But those sort of systems, they would be powering cities and towns.
True.
Again, no conflict for a microreactor company building these systems.
Yeah, one of those above ground pools. I couldn't stand that in the backyard. I'd have to have an in ground pool. And then we'd have to have a pool boy or a pool girl. We can't have a pool girl because my wife wouldn't allow that. Pool boy, yeah, that'd be okay. And you know what happens with pool boys. So anyway, what is Vinny talking about? Well, I'm waiting for the markets to give us a direction. Right now we're at the high. We're up quite a bit. We have more stocks up than down. I'm just waiting for the markets to tell me, is this going to be a follow through or are we going to get trapped? S&P 600 small caps. Huge advantage to the bulls. Huge advantage to the bulls. Don't forget, on Friday, we have a triple witching OPEX. We have triple witching OPEX on Friday. 200 billion in call deltas expiring, 200 billion versus 50 billion in put deltas expiring on Friday, OPEX. What does that mean? It means that the bears definitely have the advantage, even though we're up today. I keep taking positions off into strength. I'm just worried that this resistance is going to hold and we're going to pull back. We could see 56.75, maybe 5,600, 5,700. Watching. But tomorrow is the Fed. I'm surprised the VIX isn't doing more. VIX. Okay, VIX is down here at 17. I'm surprised the VIX isn't much higher. Maybe tomorrow, maybe towards the end of the day. We have a VIX expiration tomorrow. That may have something to do with it. VIX expires on Wednesday. I would expect the event premium to be much higher. It's not. I'm just very leery of what's going on at the moment. I want to take some profits off. I'd rather have smaller positions, make smaller profits. Intel's going. Intel's going. So one thing you have to always be considering, okay, how do institutions with a finite amount of shares out there, how do institutions instigate liquidity? How do they do it? They show a sell, okay? It popped up to 22 and change. The short's covered. We fade pre-market. People like myself, I was saying the same thing. Pathetic price action. It fades. And then it turns around and starts breaking higher. So how do they get liquidity? They show a sell and people sell their shares, All right, so this looks pretty good. Intel's starting to go now. That's what I'd like to see Amazon doing. I'd like to see Amazon showing signs that buyers are falling all over themselves. Not so much right now. Tesla, same thing. Okay, Tesla pulling back. Okay, let's see. Amazon, no, it's not moving. Apple, we're going to get a follow through on Apple after the gap down and the bad numbers. Nothing yet. Okay, so it looks like the New York Fang isn't doing its thing today. S&P pulling back. Okay, New York Fang is just sitting here. All right, so New York Fang's not in play at the moment. Okay, we're not in play, so we'll look at other sectors. New York Fang. Let's take a look real quick. New York Fang. Okay, we're above the 50-day, 3 days sideways, so we could just bore people to death on the New York Fang and then rip it end of day into tomorrow. RSI is rising. Okay, everything looks bullish, just not moving. Okay, so the airlines are working, travel and leisure are working. Airlines. Let's look at the airlines. All of these are Dow Jones Industrials Airlines Index moving higher. Dow Jones Airline Index is higher. These are in play. Airlines, Allegiant coming off the lows here. They fly in the Northeast, right? Allegiant. I think Mikey has flown on these before. My wife flew out one time. Newark was too busy, couldn't get tickets on Allegiant in in Pennsylvania. About an hour and a half from Sparta, a drive to get them to the airport versus a half an hour to Newark. Half price tickets. So that's Allegiant looking okay. Alaska Air trending. American Airlines looks like it's going to go. That's a slow mover. Delta, I would rather trade Delta or United Airlines. They move a lot faster. JetBlue flat. The Jets ETF, if you just want to trade the airlines without being exposed to individual names, trade Jets. I know Dr. Frank trades Jets from time to time. So we got a crossover back in the third week of August. Okay, so the top of this is probably 21.90. So you got another couple of bucks to go.
And then the next one is going to be the 50% retracement level. Notice that we kind of meandered around that line pretty much for the whole year.
That's your yellow line right here.
Exactly. And then if we do pull back, look at the 200-day as a area of support as well. I don't have the Fibonacci extensions on here because it has had a nice little run here. But if you're looking at a resistance area, 43.5 is going to be your resistance area. RSI making higher highs and making higher lows, kind of in a channel pattern. We are overbought here, but overbought in the trending stock.
Pretty good thing.
And then also you have the MACD making higher highs on a relative basis. So overall, this is a bullish chart. You can look at the areas of support. If we break down below the 200-day, that's going to be
Google,
concern for our goal.
Amazon looks like it's starting to go now. Watch Amazon. Okay, Amazon's starting to pull away from VWAP. Amazon pulling away from VWAP.
You know, the RSI overbought did kind of lead to this kind of sideways. So a different situation there because it had been trending lower and it was kind of this extreme pop. Market had to reset a little bit. Whereas this is just kind of like just momentum building, basically.
Yeah, exactly. Yeah, and the momentum's actually getting better and better, or greater and greater on it.
Okay, use VWAP as a trailing stop. Amazon looking like it's going to pull away. Okay, break a structure. That's your first buy signal right there. Break a structure. Okay, it needs to follow through, not get sucked back in. Amazon first BOS buy signal.
I'm happy because there's so many people who love Palantir, and I'm just glad that they came around it here. Now that I think there's more people who made money in this than lost. But again, still off the highs. Let's talk HPE. Upgrade there to a straight up buy, Jenny.
Yeah, BofA upgrading shares to buy, like you said, from neutral, raising its price target to $24 a share from 21, and they view that shares are attractive now, given the opportunity for some significant cost cuts, driven by their new CFO with a proven track record at HP. So they also did highlight a cyclical recovery across server storage and particularly networking.
BOS, break a structure. Okay, yeah, break a structure on Amazon. Let's put Amazon's symbol here. Intel looking better. Intel. Okay. Intel, what do I have? Okay, October 18th, 2225 call. Intel, semiconductors, super macro pulling back.
$40 a share or $14 billion, but this name actually still is fairly, I'd say, muted as far as like the street conviction because there's 5 buys, there's 11 holds.
Okay, Nano Nuclear pulling back.
Overwhelmingly, analyst conviction though is still neutral.
Wow. All right. Well, at this point, it's been kind of a recent phenomenon. I feel like HPE kind of got wrapped up in like the AI trade.
Nano Nuclear pulling back again.
It was kind of like this company that people didn't really rank very highly, but now it's gotten super choppy. So like, this is a pretty fun one.
Yeah,
This looks like a game of shoots and ladders.
Yeah, this kind of reminds me of Disney's chart, right? Where we see this nice moon pattern to the upside and it just completely broke down. It is still in a breakdown type of formation here, but we have found areas of support as well. As
Google going. Google's on the move. Google.
Consolidation here last year, and then obviously popped to the upside, consolidated again. So looking at that range between $17 and $19 before trying to break to the upside. But after we broke out, we flagged here and then continued to break down.
Nano Nuclear pulling back. Nvidia trying to stair step higher. Amazon, same thing. Note the order blocks. Order blocks are starting to stair step higher. Would expect to see bullish action continue as these order blocks indicate buying activity outweighing selling activity as it pushes higher. There goes Google. Google on the move. Google break a structure there as well. Change of character. Okay. We had an order block sell right at the open. Now we have order blocks buying and we're breaking higher. Google breaking higher. Google. Google. Okay, so if you're trading Google, just notice the order blocks on the right. Just notice these order blocks overhead.
We actually held that 200-day during that channel before we broke out higher. We're down, just trying to hold on for dear life to be able to maintain.
Right. Yeah.
So if that's going to be the case with your RSI still in a primary downtrend, even though we are making a relative higher low there, and MACD is
Okay, Google looking good. Google looking good.
Step into this now, or do you let this mature for another week or 2 weeks to see if we're going to see a definite 12 over the EMA cross for the MACD, to see a definite breakout of that downtrend, and then also being able to see if we're going to be able to hold or even break above that 20-day moving average. I feel like the momentum is in the price action still showing bearish right now, rather than
Let's see screenshots.
Good luck. I mean, but fun, I guess, because it's super choppy, super gappy, not a lot of directional bias at this point. All right, but look, Bank of America likes it. Somebody's stepping out there. Last one, also positive. AppLovin. Another upgrade here. We get 3 bullish notes, Jenny.
Notes and 3 really strong charts. I mean, this is maybe the most exciting chart of the 3 because we are set to close at a new all-time high, taking out its previous all-time high from 2021. So this is a pretty big deal. I mean,
Okay, where?
33.5% over the last 4 trading.
Okay, I don't know what I did to set this differently. What's today? The 17th? All right, so where did my today's go? That's weird.
From 100, so I mean, they weren't even close where they were sitting at prior to this price target raise. But that also would make this one of the highest price targets.
Oh, that's because no, that's right. 162.50 and 166. Okay, watch Google. You get supply overhead starting at about 162.50, 163. Okay, Amazon going now. Amazon going. Apple starting to go. All right, so the New York FANG index stocks, we got about 5 of them out of 5 more bullish. Had to reboot. S&P working, bullish working, buy the dips, sell the rips. Okay, buy dips, sell rips.
Now, obviously, it is fairly thin up here when you're looking at the volume, so we have to always kind of keep that in mind. If we don't see that volume really starting to pick up and backfill here, this could actually be price action. If you know, we see advances.
Okay, Amazon, S&P, Amazon grinding higher, Google. Okay, just pay attention to those supply levels. See the difference between Amazon and look at Google. You see the supply on the right over there? Now look at Amazon. Okay, same time frame. Where's the supply? Okay, you got more supply overhead on Google than you do on Amazon. That's pretty interesting. Amazon following through.
You can hold, yeah. I mean, you can actually hold that off by still moving to the upside, just not as aggressively, right? I mean, you're talking about.
Okay, what time is it? 10:47.
That's something that we just don't see that often, but it is a breakout. It's a range-bound neutral breakout.
Okay, let me take a 2-minute break. I'll be right back.
Let's say $10 to $12 to the upside or downside. Once you start seeing that type of range happening again, it could be there for a very long time, 2 months, 3 months, and then we might be able to see another breakout here again. This would be an earnings risk stock, though. Keep that in mind. Yeah. That would be one that could either break out or it can break down if they're not able to live up to the expectations of the street.
Fun stuff. AppLovin. All right. Nice. Good look there. The technicals. Thanks, KG, on the charts. Thanks, Kenny, for the bullish notes, helping us ramp up the sentiment this morning. We're still very close to the highs of the intraday session. S&P's 56, 68. The Russell is moving. The NASDAQ took a little bit of a pause and then refreshed and is rallying again too. We're at the highs in the morning.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
All right, let's take a look at the session here as we are making all-time highs. S&P 500 just in the last 5 minutes with a fresh push and breakout. Caroline Woods back with us from New York, senior markets correspondent. Mr. Dan Grant here with us in studio, senior specialist of retail trading at Charles Schwab. Dan, good morning. Great to see you. Let's throw it to New York to get us started with some all-time highs. I guess we should go to the exchange for that. Caroline, what's up?
Yes, we're seeing strength pretty much across the board today, although, obviously we focus so much on tech and we are seeing strength in tech today, but consumer discretionary is the best performing sector on the S&P 500 today after that better than expected read on retail sales. Energy, materials, industrials also seeing strength as well. But in terms of some specific areas where we're seeing strength in the discretionary kind of category, if you will, in terms of discretionary spend, airlines seeing notable strength once again today. United, Delta, Alaska, JetBlue, American all higher today. And take a look at the month-to-date performances for some of these names. United Airlines now up more than 20% this month. Delta is up 11%. Alaska up 17%. JetBlue up 16%. American up 5% this month. Up more than 3% today. Cruise lines are also higher. And then Airbnb actually is the best performing stock on the S&P 500 right now, up about 6%. Not a lot of news surrounding Airbnb today, aside from a price target cut from Bernstein to 155, but still an outperform rating. But obviously taking part in the strength in the consumer, if you will, and retailers are higher today as well. Really pretty much across the board on the Russell. Children's Place is up more than 20%. But one notable retailer not taking part in the rally is Walmart. And we are seeing more of the defensive names, defensive sectors under pressure today, not taking part in the rally. Healthcare staples are lower today, utilities flat. So Walmart, not a winner today, but a lot of retail winners.
All right, Fed's cutting 50. I don't have to shop at Walmart anymore, Dan.
I shop at Walmart all the time. That's my go-to place.
Fed's going 50. I'm going back to Target.
The problem with Walmart is up right up at its all-time highs, right? So if you thought that Walmart was going to continue to go like this, it was, you're like in a small field here. So
well, today bonds coming off too. Obviously the market has decided no matter what happens tomorrow, it's in good shape. That seems to be the message.
yeah, and so my call for 75 basis points is way off.
You might get it, Dan. No, seriously, you might get it. You're not going to get it, but you might.
I get it.
You're going to get 50.
We should be able to get 50.
You're
I
gonna get 50.
don't know that
Let's
that's
just
the
be
case.
real.
I want to see the Fed go strong here or go aggressive
Exactly.
to send a message that they're going.
All the logic says go 50.
Yeah.
100%.
Even though they need 75 based on where the 5-year and the 2-year yield is right now.
Fair enough. So, okay, then, how seriously do you take Fed funds futures, Dan? You're the bond expert. You're the,
Fed funds want 100 basis points between now and the end of the year.
because right now they're saying it's a 60% chance that tomorrow he does 50. And you think Powell has the gumption to say no to the bond market?
I think he will. Yeah, I don't think he's gonna. He's stood up to the bond market all last year,
Well,
and we were giving him accolades last year because he was good.
They're saying 50 for tomorrow, 61%.
That's probably the right call. I'd like to see them go 75,
Right. Okay.
and then say let's be more.
All right. So then we would expect what? More bull steepening. Essentially, the 2-year's got to be coming down, right? Here's the thing: the 10-year has already made a pretty big move. But if they're going to go 50, shouldn't the 2 be like going down today? Shouldn't the 2 be below 3, 4, below the recent lows?
2 years already pricing it in, right? So the 2 years right at the low end of its range, right at what 257 or 255, I think I saw.
Yeah.
355, 357.
353 this morning.
So about almost close to 200 basis points inverted from the Fed window.
So does that mean the curve doesn't steepen out anymore? Even if
All right, stock's pulling back a little bit with the S&P.
50, we're going to start seeing that finally. They go 50, we're going to see some steepening.
What about dollar? You think the dollar goes up or down if they go 50?
I think
Put it on the spot.
the dollar, I think, is going to show weakness, especially against the yen.
Thinking the dollar hasn't priced in 50 yet.
Correct.
I'm kind of with you on that. I think as well.
I'd like to see, and it's right at the right of edge. It keeps spiking lower, right on the chart, on the dollar and the dollar yen. Right as like you can see that chart right there. It's a great chart.
They go 50. Go ready for the yen probably to go nuts. You would think dollar coming off. Caroline, give you the last thought. Here we got less than a minute.
You're speaking with such certainty. I would argue that not all logic leads to 50 and
Fair
certainly not 75. I would argue that the retail sales print today doesn't necessarily point to 50. I think for the longer term investor, it doesn't really matter as long as the Fed gets it right and achieves that soft landing. But I don't know. I think that there's still a case to be made for 25 tomorrow.
All right. Yeah, fair enough. For sure. I mean, I think that they're going to get a lot of votes for 25. I think that it's probably going to be a photo finish for the vote. What do you think, Dan?
You're probably right. They're going to go with the 25.
They're going to go with consensus. They want to rock the boat.
I want them to go 50 to 75.
You want them to go 50. You say 50. Caroline says, you say 75. Caroline says 25. I say 50. Somebody's going to be right.
Rallying.
We've got all the bases covered as long as they don't do nothing.
Rallying here.
Thanks, Dave Grant. Thanks, Caroline Woods. Thank you for joining Morning Trade Live. Trading 360 with Nicole Petalines is up next. This election season, stay out of the muck and the mudslinging. Schwab Network's By the Numbers coverage.
Google just off the highs.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed.
Intel. Okay, keep an eye on Intel. That's going.
On Schwab Network.
Nice move on Intel into the gap.
Beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you?
Intel
Trading attracts
breaking into
students because it is
the gap.
enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so.
Okay, looking good on Intel.
Have insatiable intellectual
Breaking out of this Darvis box. Look at the base over there on the left. You got a gap in Kirby. Kirby over there on the left.
See any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales.
RSI rising.
I'm very good at trading.
Looks good. S&P pulling back.
For 10 years now, and it's almost second nature.
It's like they keep selling into strength. They keep selling into strength. Look at this. Look at what they're doing. Look at what they're doing in the markets right now.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11.
They keep selling into strength, folks. I can keep seeing it. We are strong. We're up higher, but they keep selling into strength.
Are almost too big to fail. Have you set yourself up correctly? It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything.
Meta pulling back.
to
Meta.
save this market.
Instead of taking cues, set the cues.
NVIDIA. What are you doing, NVIDIA? NVIDIA just sitting here near VWAP. NVIDIA. No follow through.
Every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in.
Good morning. We're 90 minutes into the trading day. Welcome to Trading 360.
Google.
Nicole Petalini live on the floor of the New York Stock Exchange, and we have records. The records for the Dow again, the S&P 500 also hitting a new record all-time high.
Yeah, Intel looks good. Intel finally looks good. I'm sure tomorrow I'll be saying exactly the opposite. I say I'm sure. Maybe things have changed. You can see the volume yesterday. 150 million shares trading hands on Intel yesterday. We're almost halfway there today. Trading 68 million, say 69 million. Got the Kirby overhead, so this could get going. I would think the 50-day is going to be a major resistance level. Maybe not.
Oil and gold are mixed because gold is pulling back down $5 after hitting all-time highs. Yesterday, we saw that a lot. Oil, $70, back to the 70 handle, 70.86. So that's up from 77 cents. The VIX is at 17.
Q's.
US dollar, 100.53. And
Nice job there, Cayman.
60, right? 60,435, up 4.25%. So that's the
Okay,
market
Intel.
at the moment. And for some of the top
Back to the highs, Intel.
market, Jenny Horn, market correspondent here on Schwab Network. We have news out on Microsoft, a big buyback. Let's hear more about that. Yeah, I will say, Nicole, now Microsoft tracking for its longest winning streak, since November of 2023. So obviously feeling some momentum today. Microsoft approved a $60 billion stock buyback program, like you said, raising its quarterly dividend also around 10% or about 8 cents a share, it's 83 cents a share, reflecting about an 8% gain. But the dividend will be payable on December 12th to shareholders on record as of November 21st of this year. The ex-dividend date will be November 21st, and the board of directors did also highlight that this program, while has no expiration date, it may also be terminated at any time. But I think really this sends such an important signal that management and the board are really, really committed to this profitable growth and the robust free cash flow generation during the current elevated AI investment cycle, frankly. As we know, the cash in which Microsoft has been spending to continue to build out AI has been somewhat of a point of concern, but it's almost like they're doubling down now by announcing this $60 billion stock buyback. So Microsoft having a pretty decent day, and I will say they've been able to avoid some of the recent pressures.
Okay, Intel going some more. There's some pretty decent buying activity here on Intel. I have to eat my words. Earlier I said it was pathetic. Now it's like completely different stock, the way it's trading, Intel.
But now attempting to recover here and hanging in there quite nicely. Thank you, Jenny Horn. Great to see you, market correspondent.
S&P moving back up. S&P.
Michael Brian King is with us, senior market strategist here at the New York Stock Exchange. Good to see you.
0-day setup. The Bollinger Bands are super wide. Still leading New York Stock Exchange 3.5 to 1. 3.4 to 1 on the NASDAQ, 4.5 on the SPY, 5.5 on the Qs, 3.8 on the Diamonds, 5.1 on IWM. So all of the indices are showing bullish signals.
And we've now seen the market expectations really shift. Right now the probability is at 65% for a 50 basis point cut at this point. If you think about one of the reasons why I thought we would see 25 previously was if the Fed were to surprise markets with a 50 basis point cut, that would have created some currency volatility. If you go back to the beginning of August, right, that currency volatility and the unwind of carry trade, right, was what
Google.
kind of trickled through markets. So by actually floating that out,
Okay, Google. Gotta take my son to school here shortly. Google's okay. Tesla. Tesla looking for a pop in Tesla.
Whatever they do from here, the risk at this point is that markets have potentially
TSLL.
in terms of that dovish narrative, and you do get, and the Fed doesn't necessarily kind of live up to those market expectations.
It's very interesting. First of all, I like that you talked about the currency because the idea was as they cut, the dollar goes down, the yen has strength, and people start to think about the yen carry trade once again, which really squashed tech and sort of spooked the markets. And that's sort of, and it came up quickly, and there were margin calls. And so, when I spoke with Jeffrey Kleintop, our chief global strategist, he said, look, can it happen again? Yes, but not in the same way because now, the margins and all that, the surprise element is gone.
Correct.
Right?
You've seen some of that unwind happen already, right?
Right.
The positioning is reset, and at this point, with what they've done.
Okay, S&P is trying to climb. All right, I got to go take my son to school. We should be back here around 12 noon. Okay, so I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Looking for A, B, C pivots. If you don't know what I'm talking about, you're a new member. This time of day, we're looking for B and C pivots. B and C pivots often show up, okay, as price action. West Coast people who get up at 6:30 to trade the open, trade the first hour or so, hour and a half, then go to work. A lot of them. Same thing on the East Coast. We got Intel continues to climb. You get B and C pivots after the first A pivot usually. We don't have an A pivot on Intel yet. Continues to climb. We look for these patterns during the period between 11 and 2 o'clock, so keep an eye out for those. A lot of these stocks are moving higher like Intel. Look for a little dip, B and C, and then a follow through D on these stocks that are stronger. Tesla starting to bounce. Maybe Tesla gives us a B and C pivot at the moment. All right, so I'll be back right before noon.
As you saw after that, kind of their last meeting, the market is going to say you're behind the curve, right? And so if you're going to signal forward, the question is, why don't you go now, right? And so if you look at, the other pieces, if you look at the 2-year yield relative to the Fed funds target rate, it's at the widest spread we've ever seen, right? So the bond market is telling you, right, that it's as much as the equity market is telling you that it's a soft landing and it's easy, the bond market's suggesting that may not necessarily be the case, and they need to kind of right-size that.
So, you have so much in your note. I went through your note. There isn't anything missing. I will say, let me ask you about housing in particular, and shelter's certainly been a little bit of a hotspot when it came to inflation, but the housing idea, right? The idea of mortgages come down, though there's a lot of people waiting on the sidelines. They all pounce in on a cheaper mortgage, but then the prices go up. I'm
speaking with Ollie Lenz and Jenny Lenz later. They're, the billionaire broker type of thing. What do you think is the hot topic when it comes to housing now?
Yes. So from the inflation side of things that you mentioned, right, that's been a talking point for the last year. Once again, we had that shelter component disappoint, but that's not necessarily kind of footing to what we're seeing in terms of the real-time, rental data. Now, in terms of, and that's a topic that that we'll continue to hear about going forward. But CPI is not consistent with PCE, and so the PCE numbers are run lower than CPI. In terms of the housing market, it's very different this time around, right? In that we have so much of home ownership is locked into this low interest rate mortgages over the next 30 years, right? So the question is like, what is the clearing point, in terms of cuts that is going to really spark, sales, kind of from existing homeowners where they're going to move, they'll move. So that's kind of one big piece of the question, but it is going to continue to help kind of the kind of home ownership going forward as we see kind of rates move lower, and that housing market is such a big component of a driver of GDP and economic growth. Right. So if we do start to see kind of the housing market pick up again, that's going to help the economy.
Just a couple of seconds on the consumer. I mean, oil's behaving, right? We know that. That's not to say that it couldn't spike or go down or move or whatever. You could tell me if you think that. But the consumer, quickly.
Yeah, I mean, look, the consumer has remained resilient, right? So this morning's numbers a touch better than expectations, but does show moderation. The consumer has remained resilient. I think the key to all of that, as I've kind of said for the last 6 to 12 months, is the labor market, right? As long as people have jobs, there's a propensity to spend, right? And so as long as we don't see that significant downturn where people are losing jobs, right, that you're going to continue to see the consumer remain resilient.
Okay, Michael Rankin, great to see you. It's a pleasure here at the New York Stock Exchange. Thank you so much, Michael.
Thanks, man.
Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Then Liechtenstein goes for technicals. Jessica Inskeep takes us to the trades for Microsoft, Oracle, and Intel. Next on Trading 360 here on Schwab Network. We'll be right back. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalini's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Jessica Inskip, Director of Investor Research at stockbrokers.com. Great to see you both today. Record day, Fed tomorrow. Jessica, before we get to some of your thoughts on Microsoft, first up, how are you feeling about the market? What direction do you think it's headed?
Yeah, absolutely. I'm still in the sideways camp. I really like the broadening out that we're seeing. From an earnings perspective, we're actually seeing earnings growth for the other 493 stocks, less Mag 7, for the first time in a couple of quarters. And that's certainly mirroring with what we're seeing on the technical level with the SPX equal weight. So that to me is very good. And I just think it's important to note it's a Fed week. We have 2 economies really going, which I think is the AI focus, which helped with that growth aspect. But now we're shifting more to that broadening. So I'm very curious to what Fed Powell's going to say. Always a lot of events on the market, Nicole.
Yeah, no doubt. Oracle and Microsoft, and you have a lot of names on your mind. So we'll start with Microsoft. Some of your thoughts there.
Yeah, absolutely. So, we discussed Microsoft last week with that anticipation of the new AI model, Strawberry, that could solve those complex problems. Little did I know that they were going to release that beta version a couple of days after we discussed. So I really think that was interesting. That trade played out much more quickly than anticipated due to that release, but nonetheless, played out where we wanted it to be. And additionally, the buyback authorization that Microsoft stated, that addition of the dividend, that accelerated my confidence in the stock. Just like NVIDIA announced that buyback, that's confidence. That's an investment from the CEO perspective that, yes, we expect more growth within this security. So I'm definitely still bullish on Microsoft, and I'm just accelerating that view.
Okay, so accelerating that bullish view. Let's see, and we were talking about that buyback today and the dividend raise. So, Ben, some of your thoughts.
Yeah, I like the bullish vantage point here from the more short-term to intermediate. I'm going to show you a long-term chart where I think we're kind of just in a bit of a range. So we need to take out the highs that we saw earlier this year before we can kind of regain that trajectory to the upside longer term. But starting off with a 5-minute candle chart, you're going to see we have seen some recent enthusiasm for shares of MSFT. You can see the movement to the upside, migration of value, pretty well-defined staircase type pattern. Simply put, exactly what I like to look for. Again, now this is a more granular look at price activity, but areas forming at higher and higher levels. 430, 434. We're currently bouncing around 438, looking like potentially a buy opportunity if this does hold. As long as we're above 434, it does look like the bulls are in charge here. So looking for a new area of value form at higher and higher levels, as long as, again, the longs remain in charge. And they have been for some time now. It's not just over the last few days, as we looked at. We're now going back to beginning of last week. You can see nice, really well-defined trend up, bottom left, top right. Same thing. I went ahead and just identified on this 30-minute candle look at price activity some of the areas of value that formed, again, along the way up. So the staircase type pattern really presents itself very well. Retests have held. Currently, again, balancing around 438. On this chart, I sort of gave the longer term, more intermediate term bulls the benefit of the doubt. I didn't really highlight that as a balance area. I just kind of focused as 430, the next big line in the sand in terms of an area you don't want to get below. Now, speaking of an area you don't want to get below, if you remember last time we looked at Microsoft, we talked about this well-defined trend up off the lows from the fall around 310, losing some of its momentum, and how this breach of 410 wasn't what the bulls want to see. Since relatively contained, I mentioned in order to kind of get back on track and regain composure, in my opinion, you got to take out 468, 469. Until then, Nicole, we're kind of in this random phase here.
Yeah, and look, I mean, I should also note the winning streak. We haven't seen a winning streak like this from Microsoft since November of 2023. It's up for the 7th day in a row. Final quick thought, Jessica.
Yeah, on this one, I have a little bit different trade than usual. I'm actually going to roll up and out. So when Microsoft was around 440, all that means when I'm rolling out, I'm extending my expiration by a week. I'm rolling up to meet the current price. So I'm going to closing out my October 25th 410 puts. I can close those out for around 340-ish, and I'm selling the November 1st 440 puts. I'm getting a total premium now with all of those together of around $24. So I'm actually creating this cushion where I can afford Microsoft to go to about 416 before I start actually losing money due to the premium collection and the structure of this trade, which is really comfortable with the uncertainty that I see within the market. You know, we not have those Fed decisions, election season, so on and so forth. So that's the way that I would structure Microsoft right now.
All right, next up, Oracle. Actually, Jefferies recently raised the target to 190 from 170. It's trading at 168 today, so it's almost at 170. So they did increase their price target 20, up to 190, $20 more. Where do you think Oracle is headed as it's really hovering around these all-time highs?
Yeah, I certainly agree with that thought process. We are certainly in this move to a cloud ramp up. We need the cloud to support that AI narrative. And then we also have the data needs. They're designing a 1 gigawatt data center. They're also offering embedded AI engines. And that is a very good cost reduction, as in it's no extra cost. So that's going to accelerate the growth potential as they're going through these deals. So they've got this multi-cloud deployment that is certainly going to be a competitive solution because of the AI embedding. I do think there's a risk of that CapEx spending, but I think the expansive offering that they have with over 100 cloud services, and again, those embedding agents is a really good value add that would be enough to push that growth and overcome the CapEx spend and the pressure on the margin that I'm seeing for Oracle. So definitely still, again, neutral to bullish view that I have on this.
Yeah, you see that lean there, Ben. What are your thoughts on the charts, please?
Yeah, I like the bullishness here as well, Nicole, and across all time frames that I'm going to show you today. We've got 3 stacked and prepared for you. First and foremost, as always, I like to begin with the more granular. We'll start with the 5-minute candle chart, the rally we've seen, how we're holding on to the gains as of recent. Look at this big vertical move. You can see the green candles and then the transition into the horizontal phase. So a textbook example, again, of those 2 phases of price development. If you're looking at it through the lens of auction market theory concepts, these principles that state that we're either seeking value up or down, in this instance, the upside, or we're establishing value. And that's what looks like is happening around this, we'll call it 170 level. Let's move away from the 5-minute candle chart, though. I wanted to show you an impressive chart as well on the hourly time frame. We're going to add a bit of time on. Similar pattern, though. You can see, again, a market that's transitioned from the horizontal 122 into a vertical horizontal phase around 137.50. Wash, rinse, repeat, staircase type pattern, bottom left, top right. Simply put, trend environment to the upside, Nicole. In this instance, pretty easily identifiable. And I always say, when you have it structure like this, when it's really well defined type trend environment like this, these are the products you want to be participating in more aggressively, a little bit more heavily, right? Versus those that are just kind of not really providing trend one way or the other. And you sort of have to look at the chart and kind of find and pick apart and sort of, really try and identify something. This just jumps out at you and screams, I am screaming higher, trending to the upside. And this is adding quite a bit of time onto the weekly candle chart. Well-defined trend up off those 2011 lows. If you remember, it was around $25 to just shy of 174 this week. We're currently in that vertical phase, again, where we're seeking value. You can see that with the big green candles, Nicole. Bulls are in charge here across multiple time frames.
Yeah, and look, there's a lot of positive comments surrounding Oracle, even with the new highs that we've been seeing. Any final thoughts there, Jessica?
Yeah, just the trade on this one, Nicole. I would be selling a cash secured put with the intent to own the security long term. So at the money around 167.5, going out about 45 days, which is putting us at November 1st. I'll collect about $575 total upfront premium, which allows me to have some caps upside potential. However, if things were to move adversely, I'd own the stock around 167.5 with about a $575 cushion.
All right. Next up, we have Intel, which has certainly been a winner this week. I think it's up over 10% for the week, of course. It's 13.5% this week. Had, the talk of the grants with the CHIPS Act, $3.5 billion for the PenchCon. Now, today, you have some restructuring plans that people like. It's up 7% today. So some of your thoughts on where this is headed?
Yeah, a little bit of a contrarian view on this one, Nicole. I'm actually not convinced with Intel just yet. I think we've got a lot of pull forward in thinking that this restructuring or this reshuffling that they've done before is going to lead to those efficiencies. And my biggest headwind that I saw with INTC was the major CapEx spending required for Foundry. We definitely want some onshoring, and I think INTC could be the solution for that. However, the road to that is capital intensive, and that's going to have a lot of margin pressure. So I like that AWS announced this, that custom AI network. It's intriguing. It's just, I'm not convinced yet because there isn't anything new or innovative or anything really in the financial structure that I see has changed for Intel within the long run. We're pulling forward a little too quickly, and I want to see earnings follow through before I'm convinced on Intel.
Okay. Final thoughts here, Ben, on Intel.
Yeah, Jessica laid out a pretty good fundamental narrative for, I think, what the charts are telling us is that investors are a little bit unimpressed at this point, somewhat unenthused, a nice run up as of recent, but somewhat limited in terms of its ability to take out key levels. You can see that on the chart behind me. I've got a 1 hour candle chart queued up. So going all the way back to, well, when the stock was kind of chopping around, what was it, 2050, it's seen a nice run up going back to the beginning of August, but not a lot of follow through as of yet. So let's step away. And as we do, you're going to notice a bit of a bearish pattern playing out. Intel, as we queue up a 4 hour candle chart. So we're going all the way back to now, we're talking about end of April, beginning of May, sideways consolidation. Now we're talking vertical development to the downside, right? Compared to our other two examples that we've been discussing here so far. And then again, this new area of value forms at a lower level. Basically, this is exactly what Justin talked about, lackluster kind of conviction associated with some of the moves. And it also shows you, as I mentioned, yeah, we took out recent highs, but we haven't seen any real follow through. And there's still much heavy lifting for the bulls to do in order to declare victory at this point. But this is, again, a 4 hour candle chart that has value moving lower. 31 is kind of a line in the sand, but right now we're just balancing around 20. So again, as I mentioned, as I pulled the chart up, a bearish pattern, absolutely. Taking one more look here, stepping back another, well, 2 steps in this instance from a 4 hour. Normally we go to a daily, but here we're into a weekly. Quickly, you can see a double top up on the left side of the screen there as we look all the way back to 2020. And as we made our way through the pandemic, we started to see some weakness come into play, sideways consolidation around 40. Looks to me like we just went vertical. And as I take a look at this, Nicole, I wouldn't be surprised to see a new area of value form at a lower level. That's definitely what the bears are looking for here.
Okay. Jessica, final thoughts. And by the way, a really good call on Microsoft from last week. I mean, you had the vision on Microsoft. Anything big picture or anything you want to add on Intel, especially ahead of the Fed?
Yeah, no, thank you, Nicole. It was definitely a shift that we're going to see with Strawberry. I'm definitely seeing. I think it's a focus on the employment picture because of that. Strawberry is just something very new. We don't even need developers. So there's a lot more deep dive that we can go into that. But I'm focused on the unemployment picture and the credibility of the Fed. I want to see 25 basis points, nothing more, purely because I want to see that the Fed is in control of the narrative. But it's going to be interesting, again, like we've been discussing, market perception. How are they going to perceive that?
All right. Thank you so much, Jessica Inskip, stockbrokers.com, and our own Ben Lichtenstein there. On the big three today, we looked at Microsoft, Oracle, and Intel. And we have more on Intel because we want to go through some of the discussions about Intel. The chip company, the other chip companies that are the competitors, Caleb Silver of Investopedia is joining me next. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for a spotlight on Intel and the plethora of news that is surrounding this chip stock and the other names, obviously, always in focus in the group. Caleb Silver, editor-in-chief at Investopedia, is with us. We had about $3.5 billion in funding under the Chips and Science Act for the Secure Enclave program. They're going to be working with the Pentagon, the Foundry update, AWS. There's a lot going on, and I want to sort of comb through all of this, Caleb. So just start with the big picture, because earlier we just spoke with Jessica Inskip, who said she wouldn't be so hot on buying into Intel just yet. We're going to take a look here at Intel stock right now. It's at 22.15, up about 6% here as we speak.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network. Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere,
on any device for free.
Schwab Network, empowering every investor and trader
every market day. Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time to spotlight Intel and the plethora of news surrounding this chip stock. We'll look at the whole group, of course, but we have Caleb Silver, editor-in-chief at Investopedia. But so much going on. We talked about the CHIPS Act and the money that they will get with a deal now, the collaboration with AWS, and even the restructuring. That's giving it a boost now. But folks, you should know this stock went from $51 late last year to $18 just recently. So, there are some who are on board and some who aren't and not buying in. Like Jessica Inskip, we just spoke with her. She said she's not buying Intel. She doesn't buy it just yet. Caleb, some of your thoughts here.
Yeah, well, Nicole, this is one of the most important companies in the world a decade ago, but it's kind of gotten surpassed by NVIDIA and some of the other chip makers that have accelerated their plans, obviously, for AI. Intel was a little left behind in that, and the companies that it supplies, Amazon, Apples of the world, are making their own chips. So this restructuring plan put out by CEO Pat Gelsinger, this is over 3.5 years old, finally coming to fruition with some details with the 15,000 layoffs announced in August. Those will happen in October, pausing construction of the factories in Germany and Poland. Remember, we have a CHIPS Act here in the U.S. The EU has a pretty big CHIPS Act as well, and Intel was going to take some money from that CHIPS Act and build those two factories. Now it's not going to do that. The EU wanted to make 1/5 of the world's chips by the year 2030. This big pause is a very big deal, and a very big deal for the U.S. because now Intel is going to be focusing its efforts here. It's selling its stake in its Altera, its programmable chips, and it's keeping its foundry business, but it's making it more independent. Nicole, this is important because now Intel is going to be making these advanced programmable chips for other companies instead of trying to make its own chips for itself. This is an interesting move.
It's interesting too, because as they talk about this restructuring plan, and over at Bernstein, the analyst there, Stacy Raskin, was saying that things are likely to remain a struggle. And she noted that maybe the timing here, the big turnaround plan is looking very expensive and poorly timed. So, you know, we might see margin pressures because of the spending that they have to do. That was something that Jessica was concerned about. And where's the innovation, she was asking.
Yeah, well, I think it may have taken a pause on the innovation to say, look, we better be supplying chips, these programmable chips, for the Amazons of the world. And it has a very big multi-billion-dollar contract now with Amazon Web Services so that it can make chips that Amazon can program for its AI efforts. The demand is insatiable right now for programmable AI chips. That's where the industry is moving. So Intel is saying, let's use our foundry business, which is an expensive business, to just make these chips for these programmable chips for its biggest customers. And the problem there, Nicole, is it's a very capital intensive business. It takes years to ramp up, and we may not see revenue out of this business for several years, 2027, according to some estimates. So big, bold move. It should have happened probably a few years ago. I think that's why investors have lost their patience with the stock. Where was Intel when this whole industry was moving this direction? It was still trying to ramp up its core businesses, and now it's paying the price for it and will pay the price. But you'll see the little bump in the stock here because finally we have some movement.
Yeah, I mean, also at this time now, you mentioned NVIDIA, and I think about, you know, other names in the group. What's have been jumping out at you? I mean, people still think Jensen Huang is the leader in this group. A lot of good talk and a lot of positive comments concerning AMD and others.
Yeah, well, these other chip makers have gotten a head start on Intel, which again was in its core business for so long, trying to turn that around. But it's such a capital-intensive business. These factories and foundries take 5 years to 10 years to build and then get chips off the line. So they've been focusing on that. They did take some CHIPS Act money from the U.S. They're going to build a chips plant, I think, in Albany, in Ohio. So they're trying to do that. It's just such a slow business. And when you have companies like NVIDIA that have really strong margins, that have been in the right market for the last 3 to 4 years, you see the difference in the share price appreciation. Investors have clearly made the decision that they're going to go with the more nimble company that has been designing chips for the future instead of the company that has been bogged down in its own core business for the last 2 decades. So I think that's what's happening there. But the demand for these AI programmable chips goes on forever. If you talk to the folks at Alphabet, if you talk to the folks at Amazon, they are going to keep building, and they need more computing power because they want to control the entire computing power of the internet. They're going to need chips forever. Where are they going to get them? The cheapest, most nimble manufacturer right now, that's NVIDIA, and AMD is coming on as well.
You know, I was just looking at Intel, NVIDIA, AMD all higher, Taiwan Semi is lower. I just pulled it up to make sure that I'm not missing some huge story. And really, when you think about Taiwan Semi, that's up 62% this year. I mean, what a difference and what a miss that Intel, the shareholders are obviously extremely frustrated when the stock is down 55% this year. That being said, we only have a few seconds left, Caleb, and I would love to hear Investopedia talk, what people may be saying about the Fed or the markets or the anxiety. Give us the latest for some of the readers, viewers. What are they saying?
Yeah, great question. But one more thing on Intel, that's going to suspend its dividend too. So that's just another blow to shareholders that are really impatient with this. As for our readers and our individual investors out there, feeling pretty confident lately, even though there's a lot of uncertainty about what will happen with the Fed. I don't think individual investors care too much about that. The bid just keeps going week after week. They want to own stocks. They want to own the big stocks. They want to own the S&P and the fast-moving NASDAQ stocks. That's continued. The anxiety is not in the stock market, in their market portfolios right now. The anxiety is in what does the rest of the year look like and next year in terms of personal finances, and what chaos will this election cycle bring to their front doors. And I think we're all waiting for that as well.
Oh, yeah, for sure. Caleb Silver, editor-in-chief at Investopedia. Thank you so much. Coming up next, the disruptors. George Sillis is standing by. He will take a look at Dell after a bullish note from Mizuho. He'll break down this report. He'll give us an example trade. Dell right now is trading at 116, and it's down over 3 months, 17%. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trent. All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. A look at developing stories this morning. I'd like to bring in Caroline Wood, senior markets correspondent, here, taking a look at HP Enterprise. That has been a mover, a winner today. We just finished talking about Intel. Some of the leading stories here after the upgrade.
Yeah, Hewlett Packard Enterprise, HPE, one of the best performers in the S&P 500 today after getting an upgrade from Bank of America. Bank of America says shares are attractive at these levels. So they upgraded HPE to buy from neutral with a price target of $24. That's up from $21. HPE is currently trading just above $18 a share, so about $6 upside from current levels. Reasons for bullishness, there are several. Opportunity for significant cost cuts driven by new CFO Marie Myers, who has a proven track record at HP Inc., HPQ. Also a cyclical recovery across servers, storage, and particularly networking. They also think Hewlett Packard could be a major artificial intelligence beneficiary, saying with decades of expertise in liquid cooling and increased adoption of supercomputing, HPE will be able to command a key position in AI adoption at enterprise and sovereign. And then also that $14 billion acquisition of Juniper could continue to help drive cost reduction. And they said once HP closes that acquisition, it will lower the company's reliance on compute
and shift the focus to higher margin networking business. So all of that looked at as positive from B of A. Now in the bull camp, I will say more than 60% of analysts sitting on the sidelines for HPE. So B of A not in the majority there. Shares, as I said, are trading around 18.23 right now. The median price target is 21.50. So a little bit of upside, but not quite as much as B of A sees.
Okay. Thank you, Carolyn. Well, it's great to see you. We're going to continue our chat, taking a look at different stocks on the move. Disruptors today. George Silas, senior markets correspondent. Every day he has a disruptor, and today it's Dell. Mizuho initiating coverage with an outperform rating, a $135 price target. It is a 116. Some of your thoughts and some more about the note.
Yeah, so I mean, if you look at Mizuho, Nicole, they're actually quite bullish on Dell Technologies, which is one of the leaders in terms of server technologies. In fact, they have about 26% market share, alongside Hewlett Packard being the two largest players in the hyper-converged server markets. And essentially, Mizuho is looking at Dell Technologies from a secular standpoint to basically benefit and capitalize on generative AI and essentially all the infrastructure that is needed to, of course, transmit data and integrate artificial intelligence in the enterprise and, of course, the consumer end computing markets. And essentially, Dell Technologies has been a legacy player in the server space. And one of the things Mizuho is saying with their initiation and their price target of $135, they're looking at Dell as one of the better players in the server space for artificial intelligence because they effectively have large market share, they have scalable products, and across the board, they're very well integrated. Their servers are with their computers, in which they actually have about 45% market share, both from the enterprise standpoint, but also from the consumer standpoint. So they're looking essentially at Dell as more of a stable, more predictable, and more viable player in the server space outside of Supermicro, which, if you look at the stock, and we've talked about Supermicro, has been extremely volatile. It's down significantly off its highs because it has less market share and less predictability. So with that said, I mean, I think if Dell, looking even at valuation, I can see why Mizuho is quite compelled. They actually have essentially earnings growth going forward. Estimates are only about 5%. Revenue growth estimates are rather conservative, around 1 to 2%. And right now, the stock is only trading around 9 times 2026 earnings. So one could say it's actually effectively cheap, considering those conservative revenue and earnings guidance.
Okay, and then what about the example trade, please, George?
Yeah, so I think, Nicole, after tomorrow, we're probably going to see another run, at least in the market, for the next few weeks. I'm quite bullish on the overall market going into the Fed and after. So with that said, if you look at Dell from a trend reversal standpoint, it reclaimed the 50-day moving average yesterday. So what I'm going to do is I'm going to structure a bull call spread in this particular instance. I'm going to buy the October monthly with 31 days to expiration, 115 calls. Then I'm going to sell against that the 120 calls. Altogether, you could earn it. You have to pay or outlay about $2.50 a share or $250 a contract in debit. So essentially, it's a 1-to-1 ratio trade. You outlay $2.50 to potentially make $2.50. The delta on that 115 option is around 50. So essentially, we're buying at the money, and essentially also the stock has to hit 120 or higher to achieve max profit of $2.50 by expiration of 31 days.
Okay, George Silas, great to see you. Appreciate it. Our disruptor today, Dell. Coming up next, time for our 360 round, we'll dive into those retail sales from this morning, what the data could tell the Fed to do tomorrow. Our panel is ready. Trading 360 here on Schwab Network. We will be right back.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Neil, how's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full service wealth management advice and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Trading 360. It's time for our 360 round. We'll bring in our panel. Ted Rossman is with us, Senior Industry Analyst at Bankrate.com. Anthony Ferry is here, CEO and co-founder at PriceSpider. Ted, thank you for being with us. One of the analysts, actually the economist over at Bank of America, was saying that this retail sales report was somewhat of a non-event. I mean, it was slightly better. Some of your thoughts. What were your takeaways, Ted?
A little better than expectations, but the bar was set quite low. I thought it was notable that on a month-over-month basis, we saw declining sales for everything from car dealers to grocery stores, furniture stores, clothing, appliances, electronics, department stores. I saw it as broad-based weakness in those sectors. I mean, not a disaster. It was still ever so slightly a month-over-month gain and couple of percentage points up on a year-over-year basis. Overall, a fairly weak report. Probably not enough to change the Fed's thinking. You know, it's interesting how there's just so many competing data points, and is it going to be a quarter point cut or a half point cut? Feels like a case could be made for both, and perhaps the most uncertainty we've had going into a Fed meeting in a while.
It's interesting because heading into the fourth quarter, you actually think, Anthony, that we will see some more spending on non-essential items, right? Because what did this retail sales tell you, and what do you think the next one could be?
Yeah, I don't think again anything jumped off the page on this particular report. Not necessarily a non-event. Markets responding positively to it, which is good. I think it shows and it indicates the resilience of the American spender, that they're keeping up with inflation. Salaries are there to support that. But yeah, as we go forward, we see trends leaning towards the same spikes that we've seen with record-setting sales for events, like recently with Prime Day upcoming, October events, sales events coming. That there's some pent-up demand for some of the larger, bigger ticket items that consumers are being more diligent about. Their shopping patterns, taking their time. A lot of options out there, but I think that categories like consumer electronics, certainly healthcare, specifically cosmetics, big spike that we see coming traditionally in the holidays, and I don't think this will be any different.
Okay. Ted, you noted that consumers are feeling in a frugal mood. I like that. What do you think the Fed should do and will do tomorrow?
Even though the CME FedWatch tool indicates kind of a 60-40 split in favor of 50 basis points of cuts tomorrow, I wonder if it might be a quarter point, just because the Fed hasn't clearly telegraphed the half-point cut. There's a school of thought that says that if they go bigger than expected, is that an admission that things are worse than we think? But on the other hand, some people say, well, if they only cut a quarter point, are they kind of behind the curve? If I had to guess, I would say maybe we get a quarter point tomorrow. I don't think it changes the overall thesis for the economy or for consumers all that much. Really, what's going to be most important is that cumulative trend of how many cuts do we get this year? How many do we get next year? People are going to be closely watching the dot plot. Is it 2 points of cuts over the next, by the end of 2025? Is it 2.5? That sort of thing. With respect to the holidays, we do see a frugal shopper. 1 in 4 say they're going to spend more than they did last year. That's it. 1 in 3 are planning to spend less. The rest are about the same. Retailers are going to have to bend on price, and they're already starting. I mean, Target, Amazon, they've already announced their holiday kickoffs for early October.
Yeah. All right. And so, Anthony, what do you think the Fed will do and what they should do? Why?
Well, that's a big question. 25 is definitely coming. I think there's no question there. As Sid mentioned, about a 60% chance now leaning towards a 50 basis point cut. Certainly, either one is going to be good for the economy and spur on the consumer to continue to spend. I'd love to see 50 get this train started, and it is going to be more. Over time, what we see that's going to be more indicative of what is going to carry forward with the increased spending. But personally, I'd like to see us jump in with both feet at 50.
And I think about the consumer debt, the credit card debt that we have been seeing, Ted. Thoughts there and where this fits in, because obviously rates are coming down a little bit. Maybe that'll help those who are in debt. But the big picture is consumer debt is high. But the consumers still are out there spending.
And that's that disconnect between perception and reality. You ask people how they're feeling about the economy, and most people say not so great, but the underlying data on jobs and GDP growth and spending has been more positive. It really comes back to inflation. The fact that if you're working and your wages are up, you don't necessarily feel great because everything costs more. And we see it with credit card balances. They're at record highs. Credit card rates are very, very close to record highs. They're technically 1 basis point lower than the record set last month. But for all intents and purposes, most credit card debt and highest rates we've ever seen, that is weighing on people. We see 6 in 10 people with credit card debt have had it for at least a year. That's very persistent. Unfortunately, lower rates are not going to make much of a difference anytime soon. I mean, a quarter point or a half a point, that barely changes the minimum payment math, which is quite brutal. I mean, that keeps you in debt for an awfully long time and costs you a ton of money in interest. Cumulative effect on the way down could start to become important if we see 2 or 3 points of cuts in the years to come. But even there, your rate's still in the high teens. So credit card debt will remain expensive for the foreseeable future.
Thank you both, Ted Rossman and Anthony Ferry. Good to see you. That's going to do it for us here on Trading 360. I'm Nicole Petalides. It's a record day for the Dow and the S&P, so watch for some record closes this afternoon. SchwabNetwork.com, 24/7. Keep it right here. I will see you at 2 o'clock for the watch list. Fast Market is next.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renning. This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions, and we'll talk some option strategies. We'll look at Microsoft, which is up on the back of a massive buyback announcement, and Intel, which continues to recover from its recent 14-year lows. And like Foley will break down consumer sentiment data in Spotify, the music streaming stock, up over 80% so far this year to multi-year highs. Now let's take a look at the major indices, which are all higher, but off of session highs. The S&P 500 and Dow Industrials hitting record highs today. S&P 500 up nearly 0.4%. The Dow up about 85 points, 0.2%. NASDAQ 100 up just over 0.5%, and leading to the upside, small caps. Russell 2000 up over 1.5%. Help me break down this market action. Let's bring in my co-host. That's Kevin Hinks. Kevin, fresh records ahead of Fed Chair Powell's decision, and explain to me, like, I don't know what I'm talking about when the market's now pricing in about a 60% chance of a 50 basis point cut.
It's rare that we get to this point in a Fed meeting and still expect the Fed to disappoint. Normally, they have guided to an exact level of what they're going to do. This time, that article that hit 1 o'clock Monday, our time, has kind of thrown a little bit of uncertainty. I still think they're going 25 basis points.
All right, we are back.
When it's leaning another way, we'll see. The market today, it's not as rosy as it looks, actually. It's 7 sectors of the S&P 500 up, 4 down, but the leadership is the high-profile names. Microsoft's announcement this morning has got all the tech space feeling a little better, and so it's the who's who. It's the high-profile names that are rallying higher, but healthcare is struggling. Consumer staples are struggling because yields are a little higher. utilities and real estate are struggling. Their interest rates sensitive. This is just a market.
They're all at or near all-time highs as far as those S&P 500 sectors. So
All
maybe that's
right. All right.
But let's expand this conversation. Bring in our next guest. It's going to be Kevin Green, senior markets contributor here on the network. KG, I wanted to get your point on this because I thought with the data that we've had come out, there's been some weakness in the manufacturing sector, except for today with industrial production was higher than expected. But in what world does this constitute a 50 basis point cut? Or is that just what the market wants?
I think the market really just wants that right now. They might be still a little bit concerned when it comes to the labor market. I mean, obviously that
All right. So far today, technology has done well. We got some mixed signals there, though. We got Broadcom, Oracle down, IBM's lower. Oracle. I was looking to buy some Oracle on a dip. Okay, so let's take a look at Oracle. Oracle. Okay, Oracle inside day at the moment. Okay, Apple trying to push higher. Amazon trying to go. Tesla looking for a B and C pivot. Tesla in the evening session looking at Amazon. Okay, back to VWAP after that nice run up. Amazon looking for B and C. Here's A over here at 10:45 or so. Amazon.
seems like the market really wants 50 basis points. If it doesn't get 25, if it doesn't get 50, it comes at 25, and we have a fade.
And what's my response to that always, Tom? The market is a petulant child.
Yes.
It always wants more than you offer to give it. Whatever you give it, it wants more. Right. And that we're getting that right in front of us.
Yeah, and to that point, so I look at it from a 25 basis point cut. Maybe they do that as a maintenance cut, right? And they're dovish in their commentary. Your Powell probably be more dovish if they do only 25 basis point cut, basically setting us up for more rate cuts at the end of the year and into next year. But if they cut
Okay, so tech is fine. Let's look at some tech stocks. Oracle inside day. NASDAQ.
Inflation numbers would have been higher, and this ability to lower rates would be much more in jeopardy.
NASDAQ 100. S&P.
Headline inflation, we saw it in CPI, we saw it in PPI. That is giving Jerome Powell a little bit of cushion here. The question for
S&P 500, we're still 324 issues higher, advancing, 179 declining. S&P 500, so NASDAQ's okay. S&P 600, majority is bullish. Court is the only one that I recognize. Small caps, S&P 500. Moderna, after being kicked to the curb last week on that gap down Thursday, we are finding some dip buyers, looks like. Enphase, pretty solid price action on Enphase today at the highs of the day, not giving anything back. Amazon still making, Enphase still making higher highs, higher lows. Steel Dynamics, Capital One Finance, or a big candle. Don't want to chase at the high of the day, but if these follow through, many of these will continue. All right, so Intel, we did get some selling at previous resistance. Okay, Intel.
The unemployment rate expectation that they have for 2025, because we're basically already hitting their 2024 estimates are actually 20 basis points above. So what are they going to do for unemployment rate for next year?
Okay, Amazon. Let's take a look at Intel. Intel had a nice run up into the high of the day. Okay, B and C pivots. Maybe B and C here.
Multi-year lows. We don't even talk about this enough. Grains, 4, 5, 6-year lows for grains right now. Every single physical commodity outside of metals right now are in.
Okay, looking for a B and C pivot on Intel.
This is where we can see a ramp up in January and February of inflation. The same thing happened earlier this year. And that's the worst thing that could happen to them when you're looking at the 1980s type of scenario. It's the summary of economic projections. What are they looking at for PCE? What are they looking at for unemployment? When you raise that unemployment target up, right, you're more tolerant.
Intel. Okay. Amazon trying to change direction. Amazon after that dip. Trying to push back above VWAP. Okay, so we got supply overhead. S&P pulling back more.
I think June tendency from the June set of 1.9 to 2.3%. They're expecting that and lower by 50 basis points. Consumers are raising the estimates for GDP or unemployment.
Okay, Bitcoin. Bitcoin still moving. Really nice day for Bitcoin. All right, let's take a look at Bitcoin. Don't want to lose sight of these assets. A big move on Intel. On Bitcoin.
Right now, if you show more flexibility and the flexibility to the upside of your
Bitcoin.
I think the market's going to say, you know what? You are okay with hotter inflation, but you also are not able to execute your monetary policy, and that makes you weaker over long term. Yeah, and I think that's one of the things.
Blackstone. Yeah, Blackstone, that's been active lately. Blackstone. That continues. I wouldn't buy it up here at the highs. Volume shows institutions have been picking up shares. Once it got above 145, they started piling in. I wouldn't buy it at the high. I would be looking for B and C pivots for better entries. Look for starting to fade right now. Okay, Tesla just sideways. All right, maybe we'll get something going in the evening session.
Especially since they're in terms of guiding, so you don't surprise the market. They're not doing that, and I'm a little surprised, frankly. Now, here's the other thing. The article that broke Friday from the Wall Street Journal, it wasn't really a Fed member. It was Dudley, who's really not involved, and he was giving more of his opinion. It couldn't be considered like the leak that we've gotten in the past through Nick Timros. It was more Dudley giving an opinion. So does that count? I don't know if that registers as a leak from the Fed. I'm not sure, but it certainly caused uncertainty with that number. So that's where I think we are. I still think it's crystal clear. 25 basis points, I'm not moving, Tom. I think 50 basis points sends the wrong message.
Yeah, we'll have to have a discussion after the show with Oliver Reddick. Maybe get into a battle royale here in the office, because he's going to rewrite an article, and check it out on the Market Minute that we release every morning. You can sign up for that on the Schwab Network website, but he's going to make that case for a 50 basis point cut. And I said that's your opinion, Oliver.
That's why there's a two-sided market, right?
Yes.
Different opinions are allowed in these markets. Somebody's going to be wrong.
Yep. Kev, I mentioned that industrial production surging 0.8%.
Yeah.
And that's on the back of the Empire State number from yesterday morning that was stronger than expected. But we've kind of been in that manufacturing recession, but it hasn't negatively affected the economy or the overall market. Is that turning the corner where, hey, maybe that lends some credence to inflation staying firm here?
I hope it's turning around, because we were talking about this recession in manufacturing. It's been darn near 2 years, 2.5 years at this point. We haven't been able to catch a little bit of a bid there, so I would hope so. It's only around 30% of the overall economy, but a weaker dollar is also going to be helpful for that. And I think that's kind of the dynamics that we have to start thinking about here in the near term. What is the impact to the dollar? We have seen a pretty good support area for it right now, and maybe we do see a resurgence back to the upside. But you would go in the past and say, okay, what the dollar should weaken. I think the industrial production number is very low bar. So I mean, when you're looking at month over month or year over year comps, you're not. I'm glad that it's not negative at this point. So I don't really have much to add there. We're talking about 25, 50.
All right, let's look at the stocks that are on the S&P 500 that are leading. S&P continues to fade. S&P 500's 320 stocks bullish, 179 bearish. Okay, Moderna at the top of the list now. Enphase number 2. Enphase continuation. Hard to buy it at the high of the day. Intel looking for a BNC pivot. Airbnb, that could run. Airbnb, that's giving you a BNC pivot right now. Airbnb. Okay, watch Airbnb. Let's take a look at that. Airbnb. Okay, let's change channels. Sorry. Let's change channels off of Schwab. Go to CNBC, see what they're talking about if they're on the air right now. Microsoft. Okay, what's Microsoft doing? Microsoft, I wanted to buy the dip on Microsoft. Okay, that's fading. Okay, Microsoft. If you took profits off in the first 15 minutes, you can see what we did here. Microsoft, take profits off. It was at my maximum gain. Okay, Bitcoin, Microsoft. F16 flyby. A Duet. F16s. All right. So I was looking at Airbnb. Airbnb gave you an ABCD pattern. If this starts to move up, you know what it looks like on the daily. You're having a bullish day. Okay. So they let this fade more. Bollinger Band's opening up. RSI pointing the way. 50 days just overhead. Stochastics, MACD look good. Just need to see more volume. This got a downgrade this morning, and yet the stock gaps up and follows through higher. Go figure. Okay, down the list, Synchrony Financial. A lot of credit card companies seeing activity. Capital One Finance, GE, Vernova, Insulet, Pod, PODD, Insulet, First Solar at the high of the day. Discover Finance at the high of the day. First Solar at the high of the day. Delta, the airline's fading a little bit. Estee Lauder, just off the high of the day. Okay, Borg Warner at the high of the day. The BWA, Apache, APA. I guess they took the name Apache off because it wasn't, the woke crowd didn't like it. The woke crowd, APA. Okay, that's coming back around. It used to be called Apache. Like the Redskins, they lost their name. Dan Ives. Okay, Apache looks like it's going to keep going. These all mean reversion plays. Jason, you had one. Vistra Energy, another. Let's see. VTLE. Let's see what it's doing now. VTLE. Okay, still moving. Okay, nice job there, Jason. At the high of the day, looks like a little profit taking B and C pivots, perhaps. Okay, so you looked at it over here at around what, 20, 28.75 or so. So you made a buck on that, somewhere around a buck, right? Palantir, PLTR, added to the S&P 500. Okay, we got a first day where we might see some profit taking. S&P still drifting lower. Okay, we made it to 5660 S&P. Okay, so it looks like a shooting star might be developing here, or a gravestone doji by the end of the day. Okay, we're off the highs. Nice volume though. This is resistance. So we're going into the Fed decision, diddling with the 5670 zone, 5670 on the S&P cash. S&P cash. Overbought, perhaps. RSI still got room to run.
So at a certain point, NVIDIA can't be up 136% every single year, but
Okay, Apache looks like it wants to keep going, but it's at the high of the day. Can't buy it at the high of the day. As a rule, Apache, United, pulling back. PACCAR, Ulta on the watch list. Ulta, another follow through day. Ulta on the watch list. Okay, nice follow through. Ulta breaking higher. Ulta.
anyone on earth needs to know about seasonality. No disrespect to the Stock Traders Almanac. Shout to Jeff Hirsch. All you need to know, in 50% of all years over the last 100 years, the stock market makes its high for the year in December. That's it. You can take the rest of seasonality and throw it out.
Ulta looks good. All right, so that's been on the watch list for the last couple of weeks. Warren taking a position a few weeks back. This is starting to go now, so it's at the high of the day. I don't know. This looks pretty good. I wouldn't buy it up here, but I said that yesterday too. We close at the highs of the session. So look at stochastics. What's stochastics telling you? It's telling you look for closes in the upper half of the daily range on a rolling basis. As this is rising, it's literally telling you to look for closes in the upper half of daily range by design. So looks good. We could go to that's 14.3. So that's as far as I want to go. Ulta, let's look at the 3 MACD setup. 3 MACD. Okay, all three of these should be turned up. They are. Okay, they're all trending since about 4 weeks ago, when Warren started talking about a position. Gapped up on that news, following through. Higher highs, higher lows. 412 is next, then 421. Then the 200-day moving average up there at 439, I believe. Looks good. Elvis. All right, so Elvis, interesting. ABCD pattern right now. B and C starting to form on Elvis. Las Vegas Sands. Okay, these have been downtrending. Elvis looks like trend break. Turning bullish. Okay, watch Elvis. This could be a good swings candidate. Swing candidate on Elvis. All right, broke the 50-day. Draw a trend line. This looks really good. All MACDs are higher. Volume is starting to pick up. Need to at least see a little bit more volume. Let's see if more stocks in the group. I like when all stocks in the group are doing the same thing. MGM bouncing. Caesars. Caesars as well. Let me go back. Caesar. Okay, that looks better. Caesar. Okay, Wynn Resorts. Okay, Wynn Resorts too.
Why would pre-orders be high if nobody has the AI features in their hand yet? You need a few months of word of mouth and people showing their friends what the AI features do to get the demand going. Nobody even knows what AI means. And then when they have the phone and they're like, look what my phone does, that's a different story.
Okay, so we got a bit of selling into strength. Dan Ives, look at that outfit the dude's wearing. Dang. That's like a neon green. It's not even chartreuse. It's like neon green. The shirt is like wild. That dude is wild. He looks like he should work at take the place of what's his name, Ronald McDonald. Hey, everybody, different strokes for different folks. I'm not going to complain.
Right here, so it's an opportunity for us to trim tech and buy Owens Corning, get a little more cyclical housing exposure with rates coming down. And I'm not chasing something. OC and the OC right now, before we bought, has pulled back a little bit. And this
Okay, Tesla pulling back pretty quickly here. Tesla, let's see, these stocks are pulling back. Amazon pulling back. All right, looks like selling into strength to me. Could be some selling into strength. Bitcoin pulling back from the high. Bitcoin. Bitcoin.
$11 max loss, the debit paid $1,000 gain would be $1,900 with a break-even point of $450.85. Once again, slow and steady, trying to buy
S&P 500 cash. S&P cash selling. All right, profit taking. Filling the gap, looks like. Okay, got a nice little short covering bounce there.
And if it does get to my higher strike price before the expiration, if there's a market that's out there, we would take that out for a profit instead of having it sit for. Yeah, I want to clarify what we got up here.
Okay, watching Uber. Somebody's selling a crap ton of puts. $2 million worth of premium. Selling the 65 puts for December 2025. Looks like Uber. Bullish setup on Uber. There's those F-16s again. Where's he going? Nice day for a flight. Wow. Freaking F-16s. And noisy bastards. Okay. They have a training facility at Myrtle Beach Airport. Used to be a military base. Okay, so Uber looks pretty good. Uber looks pretty good. I like it. Uber looks like a good swing candidate. It's off the highs of the day. Okay, B and C. Watch for B and C. Maybe you get a B and C pivot on this one for a better entry, but it looks good on the daily, right? The daily looks good. 9 and 21 days starting to turn up. Bollinger Bands are contracting, so we could stay in this zone for a little while longer. MACD stochastics rising. Volume was good on Friday. Gapped back above the 50-day on Friday. Follow through Monday, then faded. Today looks like we could continue. Uber.
Well, why don't I just buy the 440 call if I think the stock's going to go up? Because that 440 call is worth about $16.5, right? The 470 call that you're selling against, that's $6 in option premium that you're taking away. Where, hey, I can offset some of my risk on this bullish position.
What about credit spreads on Uber. MACD turning. Okay, this looks pretty good. Maybe a credit spread on Uber. When are their earnings? David. Uber earnings. Okay, Uber's earnings are November 5th. Okay, all four metrics are green. This is what you want to see. If you're going to trade a stock, especially for swing trades, I like to see these, all four of these green. And when earnings growth is 161%, that's a good signal. 15.9%, let's say 16% revenue growth. Not bad. Uber, yeah, that looks pretty good, Uber. The only thing is Bollinger Bands are coming together. Let's see what the weekly looks like. Weekly. Yeah, weekly looks pretty strong. All right, so maybe we'll take a trade. November, what was it? November 5th. All right, November 5th. Okay, so it's dipping at the moment. Uber's dipping on the 1 minute. Okay, starting to bounce now. Uber. Uber. Buy a vertical. Uber, I'm going to do an at the money and then $5 out of that. Okay, let's go. Let's go. Where is it? 73. I'll go a little bit out of the money. 75. Sell the 80, maybe. Sell the 80. 75.80. I'm looking at 75.80. Uber. Okay, what did those go for? Those are going for build the 75.80 or $1.60. Build. Looking for Uber to continue.
Yeah, at Schwab, I can get full service wealth management advice and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab. Have a choice in how you invest with Schwab.
Okay, that's October, 18 October. Uh, 60, I want to give it 60-cent stop.
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags for that. Let's bring in our next guest. That's going to be Landon Schwan. He's a co-founder of Lightfolio.
Okay, Uber, watching Uber. All right, so just now turning, coming back a little bit more, maybe a BNC pivot.
You know, their growth rate's still pretty strong, but 80% gains so far this year. Do you guys have the data to back that up?
Yeah, we do. I mean, and you can go out past, you know, you say 80%.
All right, B's forming right now. Maybe you can get a better fill than me. Okay. Uber. Okay, watch that for a few minutes. Uber. Let's see. Overhead, Uber. Okay, Uber. Okay, we're right in the thick of some supply on the 1 hour chart, Uber. You can see the supply right there. So if we can get through this 74.50 area. That should work.
Really good. The only The only kind of caveat that we've got here is the visits are down a little bit on the website, slightly, 7% on a year-over-year basis. Looking at the overall data, I'd consider this more of a fluctuation than anything really too concerning. It looks like it's more short-term, but I will say that Apple is slightly gaining. Now, you got to keep in mind what the starting point is or what the current state is right now. If you look at the total, consumer mind share of all of streaming music, Spotify is about 68% of that pie, so 2/3 we'll call it, and Apple's 9%. So they're very, very far away. They're way back in the rearview mirror. They're slightly catching up according to this statistic, but overall, I think they've got a long way to go. Now, I will say that Apple's kind of fighting back, if you will. Some would even say playing dirty, where they've changed the ability where if you're playing Spotify on a connected device, a Bluetooth speaker, you can no longer use the volume controls on your iPhone to control that Bluetooth speaker. So that, and people are also there's some theories that Spotify is draining the battery on iPhones faster than it would on something like an Android. So, and I don't think that, Apple is necessarily above those kind of things. We've seen some stuff in the past. So, they're going to fight back in the ways they can, but they really need to do it on quality because that's why Spotify is winning. Their sessions are up to 24 minutes per day per user. They've got a 70% happiness rating. People talk about how great the UI is, how good the song recommendations are. I mean, just overall, Spotify is winning because they put out a very high quality product. And of course, that's why their stock is 5x'd in the last 2 years. Now, it is kind of bumping up against near all-time highs here. I think the highest closing price it's had is maybe 346 or something. The highest price overall is maybe 360. So it's right up there, right? We ran up to that ceiling and we're kind of going sideways now. And I think, investors want to know what's next. And I think a lot of it has to do with, not only continuing to wow customers and keep people coming back, becoming a very sticky product, as you alluded to, but also getting the costs down while maintaining that very high revenue. 2 years ago, they were losing about $1 a share per quarter. Now they're making like $1.50 a share per quarter. So they're doing something right. They're cutting costs. They're using AI to cut costs, trim those expenses while holding in a growing revenue. That's every investor's dream, is revenue goes up and expenses go down. So I think that's, that is what is making this company so successful. We've got the caveats of, the web visits are down. The monthly active users didn't hit, the goals that they wanted to last quarter. But overall, everything is in a long-term trajectory going absolutely the right way with Spotify.
The master's thesis part of this story, Landon, is that this company started in 2006, launched in 2008 when iTunes was a behemoth, and they crushed them. Now Apple's changing their models and trying to compete, but they're way behind now. The inspirational part of this is that you can take on the big guys if your mousetrap is better, and they built a better mousetrap. It's the simple truth about what Spotify does. Their monthly average users, I have them up 14%, 626 million. That's still solid. But what you can do with this platform, I mean, in terms of playing music in your home, yesterday, I took a playlist and shared it across the country. Think about that, how easy that is to send music back and forth. Tom, it's the opposite of Uber, right? They could raise prices and pay the artists less, and neither would complain, Landon.
Right. I mean, absolutely. They have built the better mousetrap. I can remember Apple Music days. I mean, you'd find a song that you like. I think you paid maybe $1.99. I can't remember, to download it, right? And now you own that song. And Spotify is just like, you know what? How about you can play anything you want anytime, and it's a subscription per month. And that's how they started. And of course, it wowed everyone. Then they got into the podcast revolution, and, they signed some giant names, and they were the leaders in podcasting when everyone else is just thinking it's a fad, but it's here to stay. And now, they've got AI DJs that are recommending songs to you. You can create, share, collaborate on playlists like you talked about. It's just a better technology, and it's something that's becoming part of what people use every day. Tom, like you talked about, that's a very tough cancel. right? That's going to be up there with like a Netflix
Yeah.
where, I use this all the time. Do I really want to save whatever it is, 15 or 20 bucks a month? The answer is going to be no. You're going to cut something else. So Spotify has it nailed. I do worry long term about Apple because they own the ecosystem, right? And
Sure.
they have the ability to turn some levers and do things that make Spotify not as appealing to basically, green bubble. To what green bubble is to Android, they can do that to Spotify. We'll see. I'm sure all that's going to eventually play out in courts, but Apple can fight that way. But in the end, it's going to be quality. That's where users are going to flock to. Even if you kind of twist the knife and make Spotify less appealing on the iOS platform, Apple, if they're going to compete, they really need to do it on quality. And Spotify has such a big lead. And I do love the story, Kevin. I mean, this has got to be, and people, giving dissertations and theses on this in the future of how, you can be a really small company, especially in tech. And if it's built better and can scale, you can take on the biggest companies in the world and succeed. So I love the story of Spotify, but overall as an investor, yes, I like it here. I would, I'm buying on dips, buying at the all-time high. I'm a proponent of buy high, sell higher. And this one is going to go there, I think, long term. I think we're going to break through 360 and go on up into the fours. But I think buying on dips right now while it's kind of consolidating is the play. But yeah, absolutely bullish on this one long term, just because of how well they've executed, not only in the past, but they continue to iterate and improve that mousetrap and continue to make it better.
Like Folio with the buying on dips, maybe selling cash secured puts, maybe waiting for pullbacks. I like it, Landon. And you mentioned, their expenses are down. Gross margins improved to 29.2% all-time highs. And they said that premium average revenue per user grew 8%. So things are going the right way. And thanks for the data and the analysis here. Appreciate it.
Thanks, guys.
All right. That's Landon Swan, co-founder at Likefolio, breaking down. Kevin, he's right. It's like Netflix and Spotify, probably the only two streaming things, maybe ESPN
You got
Plus.
an email saying they're going up $1. You're like, huh?
Okay.
Yeah. Okay.
Worth it.
Yeah. If you're someone who likes music and likes playing music, the ease that you can use around this platform is it's almost absurd to where we are. It reminds me, it's just incredible. I mean, I use it literally every day.
Yeah, and I think that's a key thing is if they raised it $2, $5 a month.
I'm not sure anyone would care.
Yep.
And you're right. And all along, something you mentioned that's very important. All along through this process, they're improving cost efficiency along the way. And I think that's what's helping the stock.
That's a reflection from $69 2 years ago up to $340. You've got an example trade, Kev. Break it down for us.
So this stock hit 359 and some change a few months ago. It's backed off down to 340. So with the upgrade, KeyBank, I think, raised the price target to 440 to 440.
Yeah.
That's not a typo. 440.
Yes.
And so what I did, Tom, they don't have earnings till the 29th of October. So what I did, I went out and just did something a little more, a little more passively bullish. It's got about a 10 delta per spread. I went to the October 4th weekly, and then I bought the 350 call. Sold this week's September 20th 350 call. I paid about 440 is what it is. I think it's actually trading a little less than that. The overall market's backed off a little bit. So right around that. And by the way, Tom, you've got at least it's only a 2-weeker. And here's another reason. Look at the expected move. Even in a non-event driven week, you've got a spike in front month implied volatility. Take advantage of that to make the calendar spreads or diagonals cheaper.
Yeah, that you make a great point there, because that September 20th option that you're selling in this strategy, 57% implied volatility.
Yeah, that's
in
20 points, 18 points higher than the October 4th.
And that might be on the back of the Fed meeting tomorrow. That might move markets. So keep that in mind. But let's break this one down. October 4th weekly series, 17 days to expiration, buying that 350 call, selling that same strike in the September 20th weekly options that expire in just 3 days, paying 440 debit. There's your risk, $440. But Kev, got a nice wide range between maybe about 340 on the downside and about 360, 361 on the upside that you can remain profitable on this type of trade. And, it just gives you a range. Even though you want it to go at or near 350, it doesn't have to for you to be profitable.
Yeah, exactly right. This gives you like just a one lot, Tom, on this calendar has a daily decay, theoretical, of course, of $25 a day in theta. So one thing about Spotify, which tells me that you should probably make sure you're using price discovery, big premium in these options.
Yep. Price discovery warranted before initiation on those. Be comfortable with that risk. You got some assignment risk on that short 350 strike call in the September 20th options over the next 3 days. So keep that in mind also. So good look at a slightly upside call calendar here with a nice wide range for profitability.
S&P still fading.
Rebounding this week from 14-year lows that we hit last week after the company updated its Foundry business and its AWS partnership.
Okay. Uber has yet to bounce, so keep an eye on Uber. Okay, we're still fading. One thing I've been talking about ad nauseum is the potential for these institutions to sell into strength. That 5,700, 5,675 or so is going to remain resistance going into the Fed rate hike, and will once again fail at this level. Okay, that's the way it's looking right now. If we close any lower, that'll give us a bearish bias into tomorrow, into the Fed. Okay, it just looks so precarious right here. If you're thinking long, I think the risk is much higher that we could move lower. Now, what if you don't want to bet either direction? You just want to sit in cash. Well, that's actually not a bad idea, because if you have the majority of your positions are in cash, or the majority of your position is in cash, you have the opportunity of going short or going long, depending on how the markets react after the Fed cut. It's not so much what happens tomorrow, it's what price action dictates after they announce. So I don't know. That's why I've been taking profits off into strength. You can see last week was a perfect opportunity to do so, right back up into resistance. And now we're just sitting here with more cash on hand, taking a few day trades here and there, waiting for the Fed decision. Now, let's say you're a investor and you're not really worried about day trading, or you're not really concerned with day trading. Well, that still, I would wait until after the Fed's decision tomorrow. So what if the markets break above 5,700? 5,750 is the top of the range. The call wall is up at 5,750. Whereas we have more potential on the downside. I don't know. It's just the odds just feel. Plus, you got to remember that triple witching Friday, we have 200 billion in call deltas, individual stock call deltas expiring on Friday. So that alone versus 50 billion in put deltas, individual stock put deltas, is telling you that the bears actually have the advantage. And where do they have the advantage? Right at resistance. Okay, so if you're a day trader, you're definitely paying attention at this point, because what happens after the Fed Thursday, Friday, I mean, it makes a lot of sense for the markets to give us a bearish bias today into tomorrow. The Fed cuts rates. The markets fall a little bit more. You got OPEX on Friday, that 200 billion in stock call deltas start to lose value. The dealers can re-hedge, and we set up into Monday of next week. Okay, so a lot to happen between now, tomorrow, and Friday. But the bias is definitely more bearish. So collect as much cash as you can. That's what I'm doing. Let's look at some of the longer term funds, the T. Rowe Price Blue Chip Growth Fund, one in particular that we've been trading since the reversal in 2022. The lows in 2022 is where we started accumulating shares. You know, you've seen this chart many times if you've been around for a while. Phase one accumulation. What happens? The 10 EMA starts moving sideways. Prices no longer make lower lows. They move above the 10 EMA weekly. Once you see that action, at the end of December is where we started to buy. We had a 100% gain in 2 years, year and a half, and we came back, and now we're consolidating at highs. I'm still very bullish the economy and bullish the markets, but at this point, you're neutral. You're between the high, the low of the recent 10-week consolidation. And I'm just waiting for direction. I think that's the smartest thing to do, just because I said it, not necessarily, but because you're right in the middle and you got a big bearish looking market set up for Friday. Okay, SPY continues to sell pretty hard now. S&P is selling pretty hard.
Trying to reclaim, just from a technical standpoint first, the 2190 area. So it broke above that just a moment ago earlier today, but it needs to actually close above it for potential trend reversal. But nonetheless, there's a lot of positives I suggest for Intel. You know, they've got their foundry business, which they could do a lot to spin it off. There's the AWS news with Amazon Web Services potentially being
SPY
a
puts.
partner for developing their Fabric AI chips. At the same time, you know, we've been talking about this CPU and computer refresh cycle that really hasn't manifested from a cyclical standpoint. That again may be a catalyst for Intel because it still has about 70% of the CPU market space out there. But nonetheless, obviously the market has unappreciated Intel because it's really been an underperformer both on earnings, sales.
Okay, 559, 560 puts. Those are 42 to 45 deltas. Okay, puts.
Intel has quite a bit of cash. You know, for an $80 billion company, give or take a few $1 billion, they have about $29 billion in cash and cash equivalents. They cut their dividend last reported earnings in early August. But they do have, again, you know, like I said, pretty substantive level of cash. The problem being is they've lost their profitability.
Where are we right now? 560, 560.
Positive on a net income basis.
560 put, 560 put.
So they've lost about 17% profit margins. Gross margins have been down, but so is the stock. So I think this may be, you know, one to keep an eye on, especially around that 2190 area, which I suggest may be a pivot point. You know, when you look at the history of this company, it's actually quite simple, right? They're losing the day-to-day competition with.
Okay, we're starting to bounce a little bit. All right, so swing traders, investors, you're just waiting. Wait until the Fed is done.
You know, this short-term pop is about they're getting. Can you hear me? Can you hear me, George? We might have lost. Did we lose you? Yeah, we might have lost George. Okay, so yeah, go ahead. My point is that, you know, they're losing the day-to-day competition, Tom. They were a massive leader in every aspect of chips, and just like Spotify and iTunes, a similar story. Other firms that started smaller came out and did better than them. And the delays in some of their chips, remember they were supposed to compete with chips, and then there's delays. It's just not winning the day-to-day competition. Now,
all right, so let's take a look. Uber fading. All right, so a little too early on this one. Looks like we're right down to an area of liquidity and VWAP. Uber getting rejected.
The $3 billion that they're getting for the CHIPS Act to create chips for, you know, the military and for the government, they were the only option. Yeah. Because they're the only chip builder, and they haven't even built any of these factories that are actually pumping out chips yet.
Find what they do better than anyone else in the world and focus right there, and the company can probably find its niche.
All right, let's look at the New York FANG. All right, all of these are lower. New York Fang.
There was analyst commentary on this afterwards. JP Morgan said news clarification, not incremental changes to the business. Citigroup came out and said they should exit the foundry business. I mean, the analysts
All right,
were
Google.
shocked at this one. And so let's look at this. George mentioned the chart. We hit 14-year lows in the stock at the end of last week. George mentioned that sell-off post earnings that we had on the 1st of August, 26% drop in the shares from 29 bucks down to 21. Steep sell-off, 14-year lows. So I looked at a strategy that, hey, Kev, maybe it's going to take a while, but there's a lot of people that look at Intel and say, hey, it's worth something. So here's a strategy that takes advantage of it longer term, right? Covered call strategy where for every 100 shares of stock that you buy,
Uber is starting to bounce at VWAP.
against it to offset some of the.
Don't buy puts at the low of the day. I would like to add some protection just in case the markets continue low, but I'm not going to buy puts at the low of the day. I wait for a bounce at a minimum. I'm just talking to myself. Okay. Micron, nothing going on Micron. Okay, Micron. Micron just sitting here chopping around. Above the stop by about $2, $3. Micron, watching that one. What's ASTS doing? ASTS. Sideways consolidation.
Not on valuations, but it's been more expensive historically. You got to take that into consideration. But when you look at the covered call strategy, Kevin, it's twofold, right? You're creating yield.
ASTS.
Call against it, right? You're buying the shares at a discount. But then if the dividend continues to get paid, you're creating yield there too. And remember,
Okay, NVIDIA, looking for the bounce. Somewhat of a flat VWAP. We're below VWAP. NVIDIA. Nano Nuclear continues to fade. SMCI. SMCI still drifting lower. SMCI.
You can sell upside calls and you can roll those or adjust them as the trade goes through duration on this one, creating credits, lowering break-even points, increasing potential profitability. So you want to buy the shares, maybe covered calls works in that type of environment as long as the stock doesn't explode to the upside, past your short call, but you can always close it ahead of time if the market's open. Pretty divided. All right, Cap. Real quick here before we go, big Fed announcement tomorrow, but nervous stock market. I'm surprised. I doubt seeing the VIX, trading above or hitting above 18, 19.
I think this is a big decision, and there's still uncertainty out there, and that's going to cause what you're seeing in the market. Stocks were significantly higher than they are right now. Some of them are still up, but this market has become much more mixed.
Yep, we're almost 1% off of our highs in the session.
Okay, so all of the New York Fang Index stocks are lower at the moment. Looking for a bounce. Looking for a bounce. If you're thinking about taking some puts, I'd be waiting for a bounce. Taking some profits off right here. Okay, so we're still fading. Up volume still leading, believe it or not. Uber starting to bounce.
How could this election impact your financial future?
Okay, Amazon looking okay. Tesla looking for the bounce. A lot more red showing up as we head into the 1 o'clock hour. Okay, bouncing. S&P bouncing. Okay, so I'm gonna beat this idea to death. Okay, but I've been taking profits off into strength. In the previous week, we had a nice bounce to trade against. Okay, we had this nice bounce every single day from Monday on. We had a higher high and a higher low. So we had a bullish bias. We took out the previous Friday's high 2 weeks ago, that Friday, that big red candle. We took that out on Wednesday, setting up Thursday, Friday. We started off this week sideways in a tight range. You can see delineated higher, the previous daily low, previous daily high for Monday. So we need to close above that upper horizontal. The problem is we've got resistance overhead, major resistance overhead. Okay, so we've got major resistance overhead. Let me change the color so it's obvious what I'm thinking. Major resistance.
Welcome to Market Overtime on the Schwab.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic
Can't
array of
spell.
new technology.
The companies that are doing well are almost too big to fail. Have you set
Major
yourself up
resistance.
correctly? It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy. So what does all of this mean for the market?
As long as people want to buy it, the price can go up. Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Okay. We'll see what happens. So does fake out for the Bears? I don't know. I don't think so. I think it's more of a fake out for the Bulls. Anyone who's still thinking that this is going to break through is taking much higher risk. Yeah, we could break through. I mean, the Fed could come out and the markets take off to the upside. I don't think that's likely with 200 billion in single stock call gamma expiring on Friday. I think it's more likely we at least retrace a little bit, a higher low. Okay, so if you look at the markets right here, let's see, let me delineate this. Okay, so we got the low.
Yeah, market peaked around 9:45 or so here.
Okay, so it's more of a triangle pattern.
New York, and really been a pretty one-way journey to the levels that we
Okay.
see now. It is trying to stage a little bit of a bounce off those lows.
Looks like we could come back and test that level right there, just north of the 50-day. We'll see what happens. We're all guessing. We don't know what's going to happen. All we can do is wait until the reaction Wednesday evening into Thursday, and ultimately into Friday. So all I'd be doing now is just day trading. All right, so we had the majority, 60% was green this morning. Now we got 60% red in the NASDAQ 100. So that's selling. There's people selling into the evening session. I can't rationalize a major long setup at this point. All I can rationalize is just sitting and waiting. Now, I know that's kind of boring to some. If you're a day trader, just looking at the stocks that are actually moving today. Let's go take a look at those. So the top of the list is Moderna. Okay, Moderna turning off of a recent dip from last week, Thursday, a gap down. Now it's bouncing. It's still in a descending pattern. What was the stock I mentioned before about a trend break? I apologize if I wanted to write that down. Forgot about it. Elvis. Let's take a look at the casinos. Okay, so let me go out a little bit further and you can see what I'm thinking here. Okay, so look at Elvis. Now, this is not a guarantee. This could go with the markets too. But look at this. Look at this descending. This is a break. Okay. Elvis. Okay. So we got a trend break. And we have a move above the 50-day. And Wynn is also doing the same thing. Wynn Resorts doing the same thing. Trend break. Look at the volume. That's institutions starting to sneak in. They want to buy too much. You got to, okay, here's your base. All right. So this is phase, think of this. This is phase 4. Oh, let me go to the previous chart. Sorry. Mark this up. Okay. Phase 4 is the downtrend. Okay. That's the markdown. Phase 4. Markdown. Okay. Phase 4 markdown. Let me put this here. Change the color to red. Make this red. Phase 4 markdown. Characterized by what? Prices below. Bearish. 9, 21, 50-day. Okay, so that's your markdown. Then you got phase 1, which is accumulation. That's where institutions start to get interested. Look at this over here on the left. Okay, volume by price, showing some accumulation right there. Okay, so that's phase 1. Phase 1, accumulation. Whoops, phase 1 accumulation.
You know, Jenny, it's not like this is a stock that's just bouncing back. It's, you know, up 65% over the last 3 years. It's up a lot
Okay.
over the last 12 months. Almost 100%.
Flat 10 EMA weekly. Flat 9, 21 day daily. Okay, phase 1. Okay, so what follows phase 1? Well, obviously phase 2. Okay, phase 2 is the markup phase. I apologize, this is taking a bit longer than expected. Markup. Okay. 9, 21 day moving averages start rising. Price above. Now you want to buy dips, okay? So there we go. Green. Okay. So phase 1, there's your line there. Okay, so we're breaking into the Kirby as well. So prices should accelerate in this area. Kirby, prices should accelerate right in here. Okay, right in this area. Next level of resistance will be up here. Okay, so here's phase 1. You got the 200-day overhead resistance. Okay, so phase 2 is starting. Okay, does it continue? All right, we got a little bit of a resistance level here. It's 41.50, but it looks like Las Vegas Sands will continue. Okay, so let me just change this to Elvis. And the other benefit is that we see more stocks in the group doing the same thing. Okay, so here's Las Vegas Sands. Volume, MACD, stochastics, everything pointing in the right direction. RSI. You know what? I'm going to take a position here. Let me go a couple hundred shares of Las Vegas Sands, and I could then turn around and sell covered calls. Charts. Let me see. ABCD pattern. Las Vegas Sands. It's a B pivot right now.
Of AI, or first winners, we should say, because I mean, many of these names are obviously entering the AI world. And it was always a bit of a mystery to me, but I was proven wrong. I mean, I guess that goes to show it's all about timing. Mizuho did start coverage on Delta with an outperform rating, $135 price target, saying that generative AI.
Okay, watching BNC pivots on
across multiple markets, including these AI servers, which comprise the infrastructure and
Las Vegas Sands. Okay.
they see two major server manufacturers spearheading
Okay, Supermicro still moving lower. Supermicro.
Dell as well as Supermicro Computer, which is a name we actually haven't looked at in a few weeks here. But I think that those are two interesting names to compare because I mean, like you've one that's like hyper growth, one that's more trying to reignite its image as like a growth engine. So interesting, but they said that Dell is actually better positioned with a broader portfolio and a better balance sheet, which, hello, I mean, history is at least on Dell's side.
Yeah, I know we've talked a little bit about sort of the recent weakness in Dell, but I think it's important to, give it its flowers as well. This is still a stock that's outperformed the S&P 500 by almost a factor of 3 over the last 12 months. It's still up over the last 6 months, almost 8%, which is kind of in line with the overall market. It's really just been this last.
Okay, so that's Las Vegas Sands. Win looks very similar. Let's look at Dell. They're talking Dell. Dell broke higher this morning and faded.
If you were just asleep New Year's Eve and you just woke up now and you were a Dell shareholder, you'd be very happy. But it does have a little bit of a sour taste in your mouth. We know the stock was trading 180 just a few months ago.
I completely agree. And I was just looking at it this morning and I was thinking, like, okay, well, hey, all things considered, I think this is
Uber not following through. It's doing pretty much what everything else is doing. Looks like a bear flag on the S&P. Bear flag.
An all-time high, not necessarily what you want. Now, our last name today here is GE Vernova, and one that's also touching 52-week highs today, and one that's also been an interesting one because we're up 3% today. We got some positive analyst news, somewhat. BofA did upgrade shares to buy from neutral, but raising its price target to $300 a share from $200, which I believe is a new street high. I was just trying to check that. The previous high I could see was 261. So, I mean, blowing past at least.
Okay, so New York Bank stocks are not moving. They're all doing the same thing. The exact opposite of what we want to see. We'd like to see all of these moving higher. They're all moving lower. Lower highs, lower lows. So caution. Uber's not working.
And this name, shockingly enough, is one of the most optimistic, most loved among these analysts. There's 17 buys, 4 holds, and not a single underperformer.
Intel.
So no bears in this thing.
Yeah, this is like the GE power component of the former, big conglomerate. So an interesting one to look at. Certainly another name that, I kind of, overlook at times, but it's hard to overlook today and hard to overlook over the last few months of trading. A stock that looks a lot different than just Dell over that same time period. We talked about Dell underperforming over the last 3 months, which was down, let's call it 22%. GEV is up 32% in that same time frame. So it goes to show that there has been a rotation.
Okay, bear flag looks like it's going to roll over here. Uber, I might take this off. This is not working. Okay, Uber is not working. Yeah, the whole market's doing the same thing. We've got more and more stocks. Okay, now we're about 65% red on the day. So more selling. Day trades are dying.
Two players in the AI trade, and we'll be looking at the technicals as well as some example trades. Stick around. I'm excited about it. We'll be right back.
Interesting. We had a big gap up this morning, selling into strength. And now moving back from recent highs, recent all-time highs. Reduce your exposure. If we do get a bounce, great. But for now, let's see, what's Intel doing? Intel. Wow, big fade on Intel.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise. From bell to bell and beyond. Available anytime.
Okay, Bitcoin hanging out at the highs.
Schwab Network.
Okay, so trend down day from the highs. Continue to break levels. Intel just can't hold on to gains. The shorts come in, people start selling. Okay, Elvis though. Elvis looks good. Okay, I like Elvis. I like the fact that it's broken the downtrend. However, I'm going to wait until tomorrow. It's got plenty of upside potential. All right, so follow my train of thought here on Elvis. Okay. Elvis looks good. Do I want to try to take a position now? No, I'm going to wait until tomorrow. Can I day trade it? Sure, if that's what you want to do. But Elvis has plenty of upside. All right, so if we get even half of this, we're talking 48, or it's talking 20%. Okay, talking 20%. So maybe about 15 to 18%. So we got 15 to 8% if you're just buying shares. Okay, so we're at 41. We could see halfway there, maybe 48, maybe 50. You got a gap over here. But I'm in no hurry to buy. I'm in no hurry to buy at this point because we got the Fed tomorrow. We got a VIX expiration. We've got OPEX on Friday, triple witching. Say it again, 200 billion in single stock call deltas expiring versus 50 billion in put deltas, individual stock put deltas expiring. So the bears definitely have it. They're going to wash out all those calls. That's the way it looks right now because we're sitting right below all-time highs. Just makes a lot of sense, doesn't it? We had a nice run up last week. What do you think is going to happen? We're going to pull back. All right, so if we close right here, right now, we'd have a bearish bias into tomorrow. Just using ICT methods. So looking at a bear flag at the moment, the cyan Bollinger Bands are the TTM's turning yellow. So we might get a decent little bounce. Up volume is still leading. The majority of stocks have turned from bullish to bearish. Okay, the S&P 500 is basically 50-50. 240 are declining, 260 are rising. Let's look at the IWM. Maybe Russell has some buyers. I doubt it, but Russell 2000. It's still the majority bullish. Russell 2000 majority is bullish. IWM 1155 stocks are green, 527, 528 are declining, and then the rest are unchanged. Okay, let's look at IWM. IWM. Yeah, even IWM fading the highs. everything's pointing to potential for more downside. So the risk is bearish. We want to stay above 5,600. Okay. We know we'd like to stay above 5,600. That's going to be tested. If we close right here, we'll have a bearish bias, probably gets tested tomorrow. All right, so I wouldn't do much until tomorrow. Tomorrow. Okay, 1 o'clock, we had the 20-year bond. We have the 20-year bond at 1 o'clock. That was 118. It's 118 on the East Coast. We had the 20-year. And looks like it's rising a bit. Let's see what maybe Rick Santelli comes in and tells us about the 20-year auction. Okay, let's look at the 20-year bond. 20-year bond auction went off at 1 o'clock. I didn't catch it. 4.03%. Bid to cover was 2.5%, 2.5. Previous was 2.54. That doesn't seem too bad. TLT at the highs, I would take some profits off. If you took TLT, what was it, second week of August? If you took TLT back then on that dip that held near the 21 and the 90 EMA, if you took it then, I know some of you took the 100 call. I'm going to take those 100s off. Okay. Okay, so I'm going to take those off. TLT 20-year 100 calls. Taking some off. Taking these off. I'm taking the whole thing off. Okay, so I'm going to take these off. All right, so I'm out of those TLT calls. Yeah, absolutely. Yeah, stops on NNE. Yep. NNE, yeah, trailing stops. You definitely need to use trailing stops on something like that. Okay. NNE. Nano nuclear. Yeah, those trailing stops hit a while ago. That was yesterday, right? Yeah, we're down to 12. It's probably going to bounce soon, but I wouldn't chance anything at this point because we have the Fed tomorrow. Looks like many people that were long coming into today, if they didn't take profits in the last week, they were probably taking profits from the open. The market's briefly bounced to the highs and pulled back. Okay, so let's look at that nanonuclear again. Nanonuclear. So we ran into resistance right where we anticipated it would